So good morning students, good morning to all of you. Mamta, good morning. So students, now today we will be starting with the penalty, very important topic, and also we will also look upon to the appeals also. So the penalties and the appeals is what would be the focus area in today's session. But before we do that, one last section on the power of search is what is there that we will going to consider quickly first. So students, up till the last lecture we have seen about the other various powers which are there. If you can recall that. The other various powers which are there, students, which you all can recall. And which was that? So students, there was like the power of survey. The survey was the one of the important power, students, that we have seen. In which very case, the focus was that you catch the SSC by surprise by visiting to his premises. So you are catching hold the SSC by visiting to his place of business so as to gather the evidences. That is what we have seen. Now, beyond that, students, one more important aspect that emerges is this, that so obviously nobody keeps their valuables, their bullions, money in their place of business. Generally, in the place of business, you generally do it and you come to know the books of accounts and the documents. But if you have to check for the valuables, money, bullions and all, those generally are being kept in the residence premises. And that residence premises, if that needs to be targeted, students, if that residence premises needs to be targeted, students, this has to be only by virtue of search. So it is only the search which will enable to target the residence premises, and that, students, is done under section 132. The section is 132, students. And now with that, we will look into this particular search, power of search 132, what exactly it is. So here it is what we have. When the search can be authorized, this is an important section, students, even for the theoretical part. ICAI in the past have targeted 132 in the theory as well. So you have to be careful, and now we can also see them in the integrated case studies also. So these are also available in the integrated case studies as well, and that exactly is the point. Now students, in the description box of this particular video, I'm going to keep all the lectures link which you have done so far, number one. Secondly, I'm also going to keep one particular point which is about the 147 assessment. Third, students, I just want to also tell to all of you that I have been doing all the MCQs and the case studies. So if you can allocate some around 12 to 13 hours of your time and do those particular case studies and the MCQs which I have done it of the ICAI, it will really be very, very helpful for your last particular month preparation. Just need to be done once, students. You just need to know about what they are and how the solutions needs to be arrived at. So if that is for 12 to 15 hours, that is the time that you need to invest. So you may try to span it up in 3 days and try to finish it off. It's up to you, but please do that, because it will help you on two things. Number one, to do the very focused revision, and secondly, obviously the ICAI, out of 30 marks of your stake, 15 marks, definitely I feel strongly that it should be outrightly, they should pick up the MCQs and the case studies from the booklet itself. So it is a stake of 15 marks, 1-5, and that is the reason why it will always be serving you better if you will be looking into those MCQs and the case studies. Link of which I am just going to give it to all of you in this particular video link itself. Today itself you will find the link in the description box of this video. Now students, the very fact that students, that you are entering into the place of you are entering into the residence premises of the SSC. So it's a very serious matter at the same time. So if this is what you need to do, primarily the highest of the authority should be the one who should authorize then the search. Highest authority. In fact, they are the one who should trigger the search proceedings. If you see, students, in survey in 133A, supposing if the AO is the one who wants to do the survey, then in 133 we have seen that he will have to take a prior approval. But the person who wants to do the survey happens to be the assessing officer, for example. And that is the reason why what the assessing officer does in that case, he goes ahead and take up the approval. Necessary approval is sought, and then he goes further and do the survey. But the trigger is from the AO, and thereafter he does take up the approval, and then he proceed further to do the survey. But here in the case of search, students, the trigger is from the highest authority. They are the one who want to conduct the search. And who are the highest authority? We all are aware, students, the highest authority happens to be all these authorized officer, and they are the CITs and all. So these authorized officers are the topmost officer, students, who are the CITs, the DIT, the JCIT. They are the one who should have a reason to believe. Students, can you see this particular sentence? These officers need to have, students, what? The reason to believe. So therefore, this is for the very first time you are coming up with this particular phrase. Which is that phrase? The reason to believe. So it is these highest authority who need to have a reason to believe. Reason to believe on what? Now, students, just in a very simple term, reason to believe. I just will also look into this because this can be targeted for MCQ. So they need to have a reason to believe on what front? The reason to believe would be that if supposingly the SSC is being given the notice of 131 of summons, if you remember 131 notice summons, or 142.1, which is the notice requiring the SSC to file the return of income. So if the authorized officer, which are the highest authorities, if they have a reason to believe that the SSC is not going to comply with the notice of 132.1 or 142.1, then in that case he can authorize a search, he can issue a search warrant. Or for that matter, students, the second particular point happens to be, if he feels that, this is the most important one, if he feels that the SSC is in the possession of undisclosed income, if the authorized officer is having a reason to believe that the SSC is in the possession of the undisclosed income, then even that becomes the ground for authorizing the search. Even that becomes the ground for authorizing the search. Now, friends, the procedure when the search takes place, what can be done? So obviously the power is wide, very, very wide. In which very case they can enter to any place, they can break open the cupboards, the almirah. So all these things can be broken upon if supposingly the SSC is unnecessarily frustrating the entire search by not providing those keys and all. So they can be broken upon. So that break open is also there in this regard. And what is important furthermore, students, is this, that here, this is the most important one. They can seize. They can seize, students, this is one of the most important one. Seize what? They can seize any books of accounts, other documents, money, bullion, jewelry, or other valuable article or things found as a result of search. And this is what can be compared with the other two sections. Which is that other two sections? One is a survey 133A and another is a summons of 131. In these two sections, students, if you see, what ultimately can be done is impounding the books of accounts. What ultimately, students, can be done is nothing but the impounding of the books of accounts. That is what ultimately you can do it, isn't it? Because beyond that you cannot do anything else. You cannot do the can you seize the assets, money, bullion, jewelry, so far as the survey of 133A or summons of 131 is concerned? Answer is no. Only at the most what can be done is the the books of accounts can be impounded, and that too for a period of 15 days. And if you want to extend it further beyond 15 days, the same can be done, provided what, students? Provided that the necessary approval from the higher authority has been taken into account. But here if you see, he can seize the books of accounts, Divyani. He can seize the books of accounts, other documents, money, bullion, jewelry, or other valuable articles, those can be seized. This is what differentiates this versus the other one. And what is the other one, students? The survey and all. Now, this is also a very important theoretical question, students. Stock in trade. What about the stock in trade? Can that also be seized? To that the answer is no. You cannot seize the stock in trade. That is one of the points that you should always keep in mind. And so far as a cash, but if supposingly you are in a money lending and borrowing business, so therefore the cash becomes your. stock in trade. In such particular case, students, that can be seized. That can be seized. Now, friends, these are a very important theory questions which are there. Important theory questions. And what are they? Deemed and constructive seizure. Many a times they have asked in the past. So, students, classic example I'll just let you know first is about what? Say, for example, you you have done the search and you came across with the documents or the evidence which suggests that the SSC is the beneficial owner of a land. Beneficial owner means obviously he is controlling a particular land in someone else's name. So it technically means he's a beneficial owner, which implies this that he would have obtained or acquired these particular buildings or land, say, through a cash. So if that is what would have been done, then the SSC will then be considered to be a beneficial owner. The SSC will then be considered as what, students? As a beneficial owner. Now, if you are a beneficial owner, students, in this regard, if the SSC, students, is a beneficial owner, students, in this regard, then in that case, obviously you cannot seize them. Can you do a seizure of the same? And the answer is no. So therefore, in that particular case, students, what is the option that is left in this regard? It is about the deemed or the constructive seizure. So when it is not physically, when it is not possible or it is not practicable to take up the physical possession of a particular asset, or maybe there is a like the asset can be some explosive kind of a thing. So it is dangerous in nature. So even those particular asset, students, cannot be seized. So in that particular case, he will then pass an order, which is an order of deemed seizure. Order of deemed seizure, and which implies this that the SSC will not be in a position to, the SSC students will not then be in a position to deal with that particular asset in any manner whatsoever, unless he takes up the prior approval from the AO. So not AO, from the authorized officer. From the authorized officer, he needs to take up the prior approval. Only then the SSC can deal with that particular asset. That is what this deemed seizure or the constructive seizure is all about. Order of restraint. Many students are very confused about this concept of order of restraint. Now, what exactly it is? Students, first and foremost thing, you should always be aware of the fact that, students, you should always be aware of the fact that what can be seized, students. First of all, always keep in mind this point. What you can seize is what for an asset or an item for which the SSC offers no explanation about the manner or the source from which it has been acquired, or the explanation that has been given by the SSC is something which the search officers, they are not convinced with what the explanation that the SSC is giving as far as the manner and the source of that particular asset or the item is concerned. In that particular case, students, they can go ahead and do the seizure or deemed seizure as the case may be. So one thing we can say that what you can seize is only the undisclosed assets. That is what can be seized. But supposingly, it is very clear that supposingly if I can satisfy the search team that look, this particular asset I have acquired out of my tax paid income, then whether that particular asset or the items can that be seized? To that the answer is no. In that particular case, students, the assets or the items cannot be seized. That is one thing you should be very clear about it. Sometimes, but what happens is that the SSC at the time of search, he is providing some explanation, and the department comes in two minds. Now they are in two minds whether should I be accepting that particular argument or should I reject this particular argument. I am not sure about it. I need to further verify those particular argument and the explanation which the SSC would have given to us. So therefore, if supposingly you yourself are not sure to believe or not to believe in the explanation given by the SSC in the course of the search, you want to do the further verification of that particular information given by the SSC about the manner and the source from which the asset has been acquired, then in that particular case, you will pass a restraint order. You will pass a restraint order by virtue of which the SSC will be restrained to deal with this particular asset in any manner whatsoever unless a prior approval has been taken. So then how it works now, students? How it works? It works like this, that the department has passed a restraint order which will disable the SSC to now deal with this particular asset. But obviously now the department will proceed further to gather the evidences. The department will proceed further to gather the evidences to finally verify as to whether the explanation which has been given by the SSC is it to be believed or not. So they will proceed further and they will try to find it out that the explanation so given by the SSC needs to be believed or not. So there are various powers, as we all know, 133, 131, various powers are available to them. So through those particular powers, they will thereafter will cross check whether what the SSC is saying is correct or not. And if they feel that yes, what the SSC says is truth, then automatically the restraint order will get vacated. Automatically, students, the restraint order will get vacated. But if they find that no, the SSC, what he has said, it is completely false and baseless, then students, this restraint order will get converted into an order of seize or a deemed seizure order, as the case may be. So that is the point that it should be always be kept in mind. Now, students, this particular part, presumption, is very important. This is a very important particular point. Once upon a time, even a full-fledged theory question have been targeted. Now, before you in fact deal with this one, see, obviously when I'm doing a search and I want to seize the assets, money, bullion, jewelry, books of accounts, I need to seize. I need to be very sure that these things belongs to the SSC. All these things belongs to the SSC, isn't it? Now, the fact that they are found in the premises of the SSC, does it imply that it belongs to the SSC? Difficult to say, isn't it? Just because I happen to find it in your place, in your premises, it does not necessarily imply that it belongs to you, isn't it? But then how do I prove, as a search team, how do I prove that this belongs to you? It is very difficult for me to establish that fact. Because as you people would be aware of the fact that many a times these particular items of the assets are being acquired in cash, and therefore there is no such supportings or invoice which could suggest that these assets or the items are something which the SSC has acquired himself out of his tax-paid income. Out of what, students? Out of his tax-paid income. So whenever such kind of a dilemma occurs to the AO, that he is not in a position to decide upon. He is not in a position to decide upon what, students? Exactly. That how this particular things happen. Whether should I consider this assets or item which belongs to the SSC, because there is no supporting, there is no documents which could claim the ownership of the SSC. So it is very difficult even for the department to establish that fact because of the lack of these supportings and all. So this section, what it does, students, is that it gives a very important presumption. And the presumption that would be laid down would be that whatever is the assets or the bullion or the valuables which are being found in the premises of the SSC, whatever is the assets or the money or the bullion which has been found in the premises of the SSC, it is presumed to be of the SSC. A presumption therefore is made to that effect. So it is actually a very important section. Why? Because it is shifting the burden from the department to the SSC. Otherwise, if this section would not have been there, the entire burden to establish this particular fact that what I have found in the SSC also belongs to the SSC, this fact would then be very impossible for the department to establish. And therefore, by this particular section, they have shifted the burden of proof from the SSC to the department, from the department to the SSC. And now, therefore, if I do a search in your premises and I found the books, I found the documents, I find the signatures in the documents, I find the valuables, assets, money, so everything will be presumed to belong to you. So if a presumption of such nature is made, it implies that the burden now is on the SSC to prove it otherwise. Now let the SSC prove it otherwise, that no, it does not belong to me. It is now to SSC to establish that it doesn't belong to him. So if you see it over here, presumption in the case of search and seizure, So where any books of accounts or other documents, money, bullion, jewelry or other valuable article is found in the possession or control of any person in the course of search. Of any person in the course of search, it may be presumed. Presume what? Let's have a look. That the books of accounts, other documents, money, bullion, jewelry or other valuable article or things belongs to the SSC. That signature. So first is the books, money, bullion, jewelry and all. Second is signature and every other part of such books of accounts which purpose to be in the handwriting of the particular person are in that person's handwriting. The contents are presumed to be true in that case. So this is the kind of a very important presumption which has been made, enabling the department to do the to seize those particular books, to seize those particular asset, money, bullion or jewelry, because without this particular fact that it belongs to the SSC or it is presumed to be belonging to the SSC, you cannot seize them. You cannot seize them, isn't it? But at the same time, students, there also can be a possibility, students, just keep in mind that obviously when I'm doing a search in your premises, students, when I'm doing a search in the premises, see, I have got this particular power to presume this, but that does not imply that I will exercise this particular power blindly. It does not mean that, students, I'm going to exercise this particular power blindly, isn't it? Obviously, if I come to know, students, if I do come to know, what do I come to know? So, students, if I do come to know that this particular assets or the books belongs to some other person, and this is very obvious. So if it is very obvious, then please don't make this kind of a presumption that no, it belongs to the SSC, because I have found it in the premises of the SSC, therefore I am presuming it that it is belonging to the SSC, even though the facts are very clear to establish that no, it belongs or it is pertaining to some third party. So this presumption would be applicable only when it is very obvious that it does not belong to someone else, but at the same time, because of the lack of documents, I am not in a position to establish that it belongs to the SSC at that particular point of time only, that you should resort to this particular presumption. But as I told you that if it is very clear that these books or assets are something which belongs to a third party, then such presumption should not be made if it is very clear. But if you know that, students, one thing, that if such is the case, that it is very clear that it belongs to third party, then what this particular search team is going to do, they will hand over these particular books to the assessing officer, who is having a jurisdiction over such other person whose books or the asset has been found in the premises of the SSC. So that is how they are going to hand it over, students. Keep that particular point in mind. So what they are going to do in this case is to hand it over. I hope that all of you are clear with this one. Now there is this particular power of requisition. The power of requisition of what? Of the books of accounts. Now as far as the power of requisition of books of accounts is concerned, students, just quickly understand this one. See, the power of search and the power of requisition. What is the fundamental difference? Students, if, as I told, the classic example I keep on giving is the case of Harshad Mehta. In the case of Harshad Mehta, the income tax department never did the search. The search was being conducted by the SEBI, and accordingly thereafter all the assets and the books were being seized. Now obviously thereafter the information about Mr. Harshad Mehta would also would reach to the income tax department, and once this information reaches to the income tax department, they would also do their particular inquiries and all, and by virtue of which there is sufficient evidence against Mr. Mehta that he has there is sufficient evidence against Mr. Mehta to establish that he has undisclosed income. Now if that is established, now do you think that the search team is going to visit and conduct a search in the premises of Mr. Mehta? Is what is going to happen, students? And the answer is no. Now what is the use of doing this particular search in the premises of Mr. Mehta? Absolutely no use, students. Absolutely no use, because nothing is going to be found in the premises. All whatever was there was being seized by what? by the other department. So therefore these authorizing officers, same the topmost people that we have seen in 132, these authorizing officer will appoint requisitioning officers, the below authorities, and these requisitioning officers will then be giving a requisition to the officer under the other law, suggesting or requesting to them that after your inquiry and the proceedings are over, please don't hand over these books and the assets to the SSC. Hand it over to us, because we are also waiting to conduct this. We are also waiting for undertaking the assessment on this particular person. So if I have to say that the difference between 132 versus 132A is that in 132, students, it is the income tax department which does the first strike. The first strike, students, is from the income tax department, and so far as 132A is concerned, the first strike is done by the other department, and the income tax department is reacting to that, and they are reacting by giving these particular notices. I hope that every one of you are clear with this one. Now, friends, even this is an important one, the application of the seized asset. Students. So even this is an important aspect for all of you to consider it. So students, herein keep in mind this particular point. Now students, sometimes please keep in mind this point. Can the seized asset be released even before the completion of the assessment in consequence of search? This is a very important question, a very important theory question. Is it possible that the income tax department releases the asset, money, bullion, to the SSC even without the completion of the assessment in consequence of search? Now students, just some time back, what did I told to all of you? Just some time back, students, I told you one very important point. And what was that? That look, the income tax department, students, the income tax department, they can only seize the undisclosed property, undisclosed income, which is found in the possession of the SSC. Only that can be seized, isn't it? Which implies that if the assets or the money are acquired from tax paid income, then those cannot be seized. Now, many a times what happens, to just pay attention, many a times what happens when the search is conducted in your premises, the SSC is not in the proper state of mind. Do you all agree to this? The SSC is not in a proper state of mind to tell anything to the AO. He does not know what he is saying. In fact, even the assets which is in the possession of the SSC, even though the assets which are in the possession of the SSC, which may have been acquired by the SSC out of his tax paid income, you just imagine, he is so overwhelmed with the entire events which is getting unfolded at his premises, that he has lost his balance, he's lost his mind, and he is not in a position to give any explanation. And that is the reason why, because he is not in a position to give any explanation about the nature and the source from where these assets were being acquired, that the department is now have seized those particular assets and the valuables. The department has seized those particular assets and the valuables. That is what the department will do. But thereafter, once the search is over, thereafter the SSC regains his consciousness. And then he realizes that many of the assets which has been seized by the department are those which are being acquired, which has been acquired from the tax paid income. Now the fact that it is proved beyond doubt that yes, it was those assets which I have acquired out of my tax paid income, those assets has been seized. So in that case, now he can make an application to get those assets released from the custody or the possession of the income tax department. But here also there is a procedure, and the procedure here would be, students, that so first of all, you need to make an application within 30 days. Be very careful, students. These are the theory important questions. So the person concerned needs to make an application to release of the assets to the AO within 30 days from the end of the month in which the asset is seized. And also what, students? The nature and the source of acquisition of such asset is explained to the satisfaction of the AO. The nature and the source, students, of acquisition of the asset is explained to the satisfaction of the AO. If that is what is done, thereafter what we can say, students, that the assessing officer can release the asset after the prior approval of the PCIT. So he can take up the prior approval of the PCIT, and thereafter, students, thereafter what? The recovery can be done of the existing liability. The recovery can be done of what? Of the existing liability. So this is what, students, could be done in this regard, and by virtue of which, students, we will say that first, we will say, so what is this recovery? Many students are doubtful about, sir, what do you mean by recovery of existing liability? Students, recovery of existing liability means supposingly there is already, say, old liability for which I have already given the notice of demand, but the same has remained unpaid till date. So therefore, those assets now for which the SSE has offered the explanation, and we are convinced that yes, these explanations are correct and it is acquired out of the tax-paid income. So before we release this particular asset, we will first try to adjust any existing liability which is there against this particular asset, and after the adjustment, whatever is the balance after the adjustment, students, after this particular adjustment is done, students, is done, the balance particular amount of the asset is what would be released to whom? To the SSE. That is the point. Now, students, this was a case law. Okay, before that, we can just also read this one. Released of a seized books. So the above was about the asset, and what about the books? Students, the books can be released only after the assessment is over, and within 30 days after the completion of the assessment, students, within 30 days after the completion of the assessment, in consequence of search, that the books of accounts could be released within 30 days. Within 30 days, students, or when the assessment is completed, that the books of accounts, students, could be released. Is that clear to all of you, students? That is what they can do it. Now, so this case law was being targeted by the ICAI. I don't think they should be targeting it again, but still, let's do it and move on to our topic on penalty. So, students, here it was a case of, be very careful on this one, students. Here it was a case of, are you aware of that? Wherein the search was conducted in the premises of the SSE, and accordingly the assets and the books were being seized. Now here the SSE was very smart. What the SSE did was that he made an application to the department, and he requested to the department that, look, you also know and I also know that there would be a huge liability that will arise after the assessment and all are completed. There would be a huge liability that is going to arise. So why don't you do one thing? In this case, since you have already seized my asset, why don't you do one thing? Out of the asset which is being seized, outrightly, say for example, outrightly you adjust 50 lakhs. You please outrightly adjust 50 lakh of rupees. And thereafter what it is? Thereafter, once the assessment is all over, once the assessment and all is all over, thereafter you do one thing. Once these assessments and other aspects are all over, thereafter, students, you can thereafter, whatever is the balance difference, we can see how that needs to be paid. But at least right now, I also know and you also know that my minimum liability in this entire process would be of 50 lakhs. So why don't you do one thing? Why don't you, in fact, adjust this liability against the asset which has been seized by you? So this is a sort of a particular application which the SSE can make. So question therefore is whether on such application, whether the you can say an estimated liability, can that be adjusted? That becomes the issue under consideration. To that the answer is no. Why the answer is no? Because if you see over here, very clearly they have said that only the liability which is determined on the completion of assessment, primarily on the completion of assessment, that whatever is the liability, including the penalty primarily, so only that liability which is determined, and the liability can be determined only on the completion of the assessment proceedings and the penalty proceedings. Only on that completion that the liability would be known, and thereafter the seized asset could be used to adjust against this particular liability. The seized asset could be used to adjust against this particular liability, and this is what this particular, the Allahabad High Court also in Hemant Kumar Sindhi's case, Allahabad High Court also in Hemant Kumar Sindhi's case has held that the fact that the SSC has made an application to use the seized asset to adjust upon the estimated liability that will arise on completion of the assessment in consequence of search, this sort of an application by itself is invalid, because the law only provide such adjustment on the determination of liability which will happen on completion of the assessment and penalty. I hope that every one of you are clear with this one. With this one, students, now I will start with the appeal, with the penalty part first, and then we'll switch to this one, your appeals and all. The best sight is to see when your kid goes to school and they are in fact saying bye before they leave for the school. Students, penalties topic is in the chart number which is there, chart number 1 and 2. Now, so far as the penalties are concerned, students, first of all, let me tell you a certain important aspect in the penalty part. I am in the chart number 111. How you do this penalty, students, and what you expect in the examination. Generally, I strongly feel that the penalty as a topic is so important in the MCQ side. Then, if you see the case studies also, you will find maximum of the areas being covered in the MCQs. So, I will suggest you to do the penalty in this compartment, which you can take a note of it. First is this particular penalty, students, which has been. Good morning, Riddhi. So, when you talk about penalty, students, always keep in mind this particular part. This is because on the day of the examination. Okay, by the way, students, I would be taking some 7 lectures. 7 lectures I'm going to take, students, of a bullet revision. You'll say, so what is this bullet revision? Bullet revision is those revision which we do on the last day of the in fact, this is your last day revision. Like for example, there are many monetary thresholds which are there across various places, which students get confused. So understanding the concept is one thing, but at the same time, you people also are aware that the spread of this monetary limits are so wide that many limits are there. So that creates a lot of issues. So of every topic, those areas which you also are aware that this can really create a huge concern to all of you as you will proceed further, those are the areas I'm going to capture them so that this will become ease. You will be at ease in revising the same on the day of your examination. So that is precisely the very idea of taking up these particular topics. Now students, as I was telling you, निशांक हिंदी का तो रिवीजन चल रहा है ना, वो तो अलग से दे रहे हैं. अभी तक तो हमने 50 मार्क्स का हिंदी का रिवीजन तो कर दिया. अब आपको ये मंडे या ट्यूसडे को और 30 मार्क का रिवीजन, 70 मार्क का रिवीजन आपको 50 मार्क का तो मैं हो चुका है. अभी और 25 मार्क का और 30 मार्क का, जिसके अंदर वो जिसमें आपका TDS, TCS, ट्रस्ट टैक्सेशन और असेसमेंट पेनाल्टीज एंड ऑल, तो ये आपका ये मंडे को आ जाएगा. तो हिंदी का तो मैं तो दे ही रहा हूँ पैरेलली. वो अलग है, मेरे टेलीग्राम चैनल पे अगर आप देख लोगे वहाँ पे आपको मिल जाएगा हिंदी का. अभी मंडे ट्यूसडे को आप देखोगे कि बैलेंस 25-30 मार्क का भी वापस आ रहा है इसके अंदर. नाउ स्टूडेंट्स, एज फार एज नहीं, वो तो मैंने अपने यूट्यूब चैनल पर डाला है. तो वो वाली जो है वो अपने यूट्यूब चैनल पे मैंने डाला था. यहाँ पे मैं इंग्लिश डाल रहा हूँ, वहाँ पर मैं इंग्लिश हिंदी कर रहा हूँ. तो अभी तक मैंने 50 मार्क का मैंने कर दिया, जिसमें नॉन रेसिडेंट टैक्सेशन, इंटरनेशनल टैक्सेशन, वो सब चीज़ है. देयर आफ्टर PGBP एंड ऑल, ICDS, एवरीथिंग, वो मैंने डाल दिया. और अब जो मंडे को अब आ रहा है उसमें ट्रस्ट टैक्सेशन है, TDS, TCS एंड असेसमेंट एंड ऑल. So students, when you do this one, penalties, first of all, the penalties target has to be like this. You do revision students in this way only. 270A, 271 AAB, 271 AAC, 271 AAD. These are the sections you need to target. That is the point number 1. The second one, students, is a cash penalties. That is, remember, default of 269 SS results into the penalty of 271D. Default of 269T results into the penalty of 271E. The default of 269ST results into the penalty of 271DA. These are all about the cash penalty. Thereafter, students, whatever is a penalty has to be covered, like TDS penalty. This TDS penalty you will do in the TDS topic, not here, which we have discussed. Remember 234E and all, on the statement for the late filing, that was a fee and all. So those were the case. 221 TDS default will result into a penalty equivalent to the TDS not deducted, or no deducted but not deposited. Those are the things. The other one, students, happens to be the transfer pricing penalty. The transfer pricing penalty. This is the other one, which again would be to be done in the transfer pricing topic itself. And the last one, students, is the miscellaneous one. So there are few in the miscellaneous area. There are few penalties which are there in miscellaneous area, which I'm going to earmark from the table which is given above in this particular thing. So those miscellaneous penalties could be done, and that is the way to deal with this important topic on penalties. So let's look upon to this then. What does this particular section speaks about it carefully one by one. The first one, students, happens to be that of the underreporting. Underreporting, students, you people all are aware of it. What is equally very important is its calculations. The calculation of underreporting of income and the misreporting and all are something that you need to be very, very careful about it. So let's have a look towards this one. Students, this penalty on account of underreporting, please be very careful that it is a percentage on the tax amount. This is a percentage of tax amount. and this 200% arises because of the misreporting. Isn't it? So that is what primarily the underreporting has been all about. Now if you see over here the cases of the underreporting in a very simple way, students, if you see in your case study booklet also, I think with this particular point is very simple to be known, and this let's directly look upon to a particular case study. 139.1 ROI, thereafter 143.1 intimation, thereafter 143 regular assessment, and finally 147 the income escaping assessment. So say for example under 139.1 your total income that you have disclosed is 10 lakh rupees. 143.1 it has been increased to 12 lakhs. 143 regular assessment it went up to 16 lakhs, and finally 147 it happened to be 22 lakhs. Students, how much is the underreporting? How much is the underreporting? What is your take on this one so far as the underreporting in these cases are concerned? What is your take, students, on this one? Quickly. Can we say that from 139.1 to 143.1, can we say that this is because of underreporting of income? Can the charge of underreporting be levied on this? Is the question under consideration. Whether we can put up the charge of underreporting in this particular case, students, to that the answer is no. The increase that has taken place, Jade, Divyani, the increase that has taken place because of this cannot be on account of underreporting, but we will say this is because of an apparent mistake. This is because of what? This is because of an apparent mistake. So it is the apparent mistake which is what we need to speak about it. So this is what is the consequence of this one. The increase that has taken place from 10 lakhs to 2 lakhs, we will say that this is because of the apparent mistake, and therefore we cannot say that this is on account of an underreporting of an income. But yes, now students, you can say it very categorically that the first underreporting will happen over here. This is an underreporting of an income. Underreporting of income, and this increase also will be equal to this addition also would be considered to be an underreporting of the income. So these increase that you can see for yourself, students, is on account of underreporting of income. Now my another question to all of you students is this: is it that all the additions that has been made, students, is it that all the additions which has been made can be considered as a case of an underreporting of an income? Can we say always that these additions that has taken place, can we therefore say, is it on account of an underreporting? To that the answer is no. Just because that the addition, students, has taken place, that does not imply that you are going to create a charge of an underreporting. Just because the additions has taken place. Be careful. Always keep in mind one thing. If you can write one sentence, students, please write it. Please do write this sentence. Just because an addition has taken place, that by itself cannot be considered as underreporting. That by itself cannot be considered as underreporting. Section 270A subsection 6. Section 270A subsection 6 provides the cases which cannot be considered as underreporting. Which cannot be considered as underreporting. Which are those cases we will see. But just keep this sentence in mind, students. If the question is silent, if they don't give any other information, if they just give you the way what I have given it to you, that is from 10 lakhs it became 12 lakhs in 143.1, and thereafter from 12 lakhs it became 16 lakhs in 143, and from 60 lakhs it became 22 lakhs in 147. If this is what is the only question that they have given it to you, nothing else has been provided, so then yes, please go ahead and say that whatever has happened from 143.1 to 143, or whatever has happened from 143 to 147, yes, we can say that this is on account of an underreporting of income. This is on account of an underreporting of income. This is what you all can say. This is what, students, you all can say in this regard. I hope that all of you are clear with this for now. So these are the cases, students, which can be considered to be a case of an underreporting. Okay, but if the question is silent. Now, apart from that, students, what else? So here, students, in this case, this is also an important one. Just I'm ticking mark some of the critical areas. Just keep them in mind. Here it, student. So if you see about the first one, I have already told to all of you about the fact that if the return of income is filed and the income is assessed for the first time, if the income is assessed for the first time, then the income whatever has been assessed by 143, what was the example, or it as compared with the income which is determined in the ROI processed under 143.1. That is the comparison which we have done it from 143 to 143.1. But what if the ROI has not been filed at all? And say, for example, your assessment is done in 144 and your total income assessed is 10 lakh rupees. So if this is what has happened, students, that you have not filed the ROI and the AO has done the assessment under 144 and the total income that has been assessed is, say, for example, rupees 10 lakhs. In that particular case, students, please understand one thing. Up to the basic exemption limit of 2.5 lakhs or 3 lakhs or 5 lakhs as the case may be, depending upon who you are as an individual. So depending upon the cases of the 2.5 lakhs or 3 lakhs or 5 lakhs. In all these cases, students, we will say that yes, there is to the extent of the basic exemption limit, we will always say that there is no underreporting of income. To the extent of the basic exemption limit, we will say that there is no underreporting of the income. So therefore, in my example of 10 lakhs being assessed under 144, we will say that the underreporting is 7.5 lakhs. This is the important MCQ question. It is 7.5 lakhs. That is the case. Now, if the reassessment has taken place, which I have told you in my example, 147, 22 lakhs. So you people compared 22 lakhs with then 16 lakhs, isn't it? And then finally concluded that 6 lakhs would be considered to be an underreporting of the income. So the income which was reassessed was compared with the income which was assessed earlier. Income which was assessed earlier, and that was the reason of your conclusion that rupees 6 lakhs, was the underreporting that has taken place. Now if you see directly, students, point number 7 over here, what does point number 7 says? If there is a loss case and the assessment order which was passed by the AO has the effect of, the assessment order which is passed by the AO has the effect of reducing your loss. So you have claimed in your ROI the loss of 8 lakhs, whereas the AO has finally done the assessment of rupees 2 lakhs. So therefore your loss has been reduced. From 8 it became to 2. In such particular case where your loss has been reduced and it now became 8, from 8 it came down to 2. In such particular case, students, in such particular case, we will say what? That on such reduction of the losses from 8 to 2, that 6 lakhs difference will then be considered to be an underreporting? Or say, for example, the loss that you have claimed was 8 lakhs and finally what was assessed by the AO was positive 2 lakhs. Means from loss it became an income. Then in that particular case, students, your underreporting would be from 8 lakhs, any case, full, plus 2 lakhs of your income turnaround. So the total underreporting in this particular example is that of 10 lakhs. From loss it became to income. So in this example it would be rupees 10 lakhs. So this is how the underreporting has to be measured. Now this is what I was telling you, students, all of you. That just because there is an addition, that does not necessarily means that this will be considered to be a case of an underreporting. Always keep this particular point in mind, students. Just because that there is an addition, that does not always would mean that there is an underreporting that has taken place. As you can see it very clearly, some important tick marks which I am giving it to all of you. This is this. The second one is on the basis of the estimate. This fourth and fifth. So first, second, fourth and fifth are very important. Now students, if in respect of any additions, like for example students, in income tax law, we all are aware that the lessee does not get depreciation. It is only the lessor who gets the depreciation allowance. There is only one case, students, where actually the lessee gets a depreciation. But apart from that case, in all the remaining cases, it is a lessor who will get the depreciation allowance. So now students, in this particular situation, if we all will say this, that supposingly there is a case where in a finance lease of an asset, the lessee has claimed a depreciation allowance because he felt that although I don't have the ultimate title over the properties and other things, which is to be the title over the property, or I don't have the ultimate control, but still I am using it. The economic advantage from this asset is taken by me only. The economic advantage from this particular asset has been taken by me only. And the fact that I have taken the economic advantage from this particular asset, therefore the assessee in this particular case, students, now is of the view that it is me who should be now taking up. It is me who should be taking up the depreciation allowance. So you have found that in this case, the lessee has claimed the depreciation allowance. Now the matter came up in the assessment, and although the assessee has tried his level best, tried to convince the AO, but eventually the AO has disallowed that particular claim. So accordingly, there is an additions in the total income. There is an additions to the total income, but because there is an additions to the total income, does it therefore imply that the assessing officer, because that there is an additions to the total income, does it imply that the AO? Does it imply, students, that the AO is going to consider this additions to be a case of an underreporting, while all the facts, material facts, and the explanation on such additions was being provided by the assessee in the course of the assessment? Will you still consider that this is an underreporting of an income? And the answer is no. This definitely cannot be constituted as an underreporting of an income, students. The fact that the assessee has made the full disclosure, has provided the material facts, has provided us the explanation, in that scenario, we cannot say that this could be considered to be the case of an underreporting of an income. Now, if you see, the second particular point is all about the estimate, students. And what is this particular point on the estimate? Amount of underreported income is determined on the basis of an estimate. On the basis of what? On the basis of an estimate. Now, many a times, you can say, sir, any example on this? I can give you an example. Like you are in the diamond industry. Now, in diamond industry, do you know, students, what generally does? The AO does? Everyone knows roughly the margins. The industry margins is fairly known. Many a times, what the AO does is that he takes up the standardized GP margin. And from the standardized GP margin of the industry, he thereafter start verifying the further claims which has been made by the SSC. So he does not check, or he is not inclined to check all the items which falls before the GP margin. He does not want to check or verify all those particular claims which are being made before the GP margin. His only interest, he is only keen to verify only those areas or the items which are falling below the GP margin. So if you want to only verify those particular claims which are falling below the GP margin, then in that case, what happens, do you know? SSC has shown the GP margin of say 25%, whereas the department is looking at 40% standardized GP margin. So in that case, SSC claimed 25 as his GP margin, but the department took up 40% as the GP margin, and only the items which was falling below this GP margin was subject matter of the AO's scrutiny or verifications. Nothing which was above it, because he said that what I am going to do checking at all that? What I am going to do about checking all that? I'll directly will pick up the 40% which is the industry margin. So that rise of 15%, the addition of 15% students is purely based on the estimate. This addition, students, which is the 15% which has been made, is purely on the basis of the estimate, and because of that reason, such additions which are purely on the basis of the estimate also cannot be considered to be a case of an underreporting of income. Now, point number 4 is very important, students, and this has been targeted in the MCQs across the places. Students, please be very mindful of the fact that in the case of a transfer pricing, what generally happens is that there is a difference that is determined between the ALP and the transfer price. The difference between the ALP and the transfer price, students. Now, as far as the difference between the ALP and the transfer price is concerned, this difference is thereafter added back to the total income. Isn't it? The AO will then add the difference to the total income. Isn't it? Now the question is that, okay, you have added the difference in the total income. You have computed the tax liability that will arise on account of such additions. But now the larger question that remains is this, that whether such additions that you have made will also be considered as an underreporting of an income. Now that will depend on what students. It will depend upon the fact that whether this international transaction hasn't been disclosed in the documents which are specified under section 92D. That is point number 1. Whether the SSC has put across all the facts, has covered all the facts in those particular documents and the books which is maintained under section 92D. If the SSC has done that these documents and every details has been captured under 92D, then this additions, which is the difference between the arm's length price and the transfer price, so this additions may have resulted in enhancement of your total income. This additions may have resulted in the determination of the tax liability, but such additions cannot be said that it will also be considered as what? It will also be considered as an underreporting. So this will not be considered as an underreporting. Now students, please appreciate the fact that what if I don't make such disclosure in my ROI? So if you don't make such disclosure in the ROI, do you know what is going to happen? Suddenly there will be an extreme position that will be taken into account. Suddenly, students, there would be an extreme position that will be taken into account. And what is that extreme position? The extreme position would be that if you don't do the disclosure, students, then this would be considered as a case of what? A case of an underreporting because of misreporting. This will then be considered as a case of an underreporting because of a misreporting, and thereafter the penalty of 200% on the tax on the underreported income would be levied. The penalty would be 200% of the tax on the underreported income would be levied. That is what they will do. Not only that this would be considered as a misreporting, but also, students, you will have to bear an additional penalty which is 2% of the value of international transaction. So please keep this particular point in mind. This is such a very important thing which I have discussed with you. One is that the mere additions to the mere additions, which is difference between the ALP and the transfer price, that additions to the total income and consequently the increase in the tax liability, that will not necessarily be considered as an underreporting income if the SSE has disclosed those international transactions in the books which he has maintained under 92D. Then in that case it will not be considered as an underreporting, and accordingly there will not be any penalty. So though the tax will be charged, but it will not then be considered to be a penalty. That is point number 1. And the second particular point happens to be, what is the second point, Shruti? That if you don't disclose this international transaction, then what is the consequence? 2 consequences. Consequence number 1, it will be considered as what? It will be considered as a penalty. It will be considered as a case of an underreporting on account of misreporting. And underreporting on account of misreporting. And point number 2 would be, students, there would also be a further penalty of 2% of the value of the international transaction. I hope that every one of you are clear with this one. And the last one, students, can you see that? This one. So what it says. So if you see over here, amount of undisclosed income on account of search operation. On account of search operation, students. So students, if there is search operation, then you will find that the penalty is covered under section 271 AAB. The penalty is covered under section 271 AAB, and therefore if the penalty is covered under section 271 AAB, can then in that particular case the penalty would be also be considered under 270A? And the answer is no. 271 AAB makes it very clear that look, I am exceptional. If the search is conducted and the penalty is covered under section 271 AAB, then in that particular case the penalty cannot be imposed under section 271 under section 270A. Then in that particular case, students, the penalty cannot be imposed under section 270A. That is what they are trying to suggest in this case. So this is what your point number 5, students, is all about. Thereafter, misreporting, I have already told you. The most important happens to be point number F. Other than this point, I think all of you are aware of it. Whatever is the situations which could be considered as a case of a misreporting. Now, apart from that, students, herein, computation of an underreporting of an income. How do we compute the underreporting of income? In fact, this particular point was telling you about the computation only. What we discussed in this example was nothing but how the underreporting will be considered. But just for the sake of students, the MCQ calculation, mainly they will be very much interested only to ask you a question which has to do with what is the ultimate penalty that will be imposed because of this underreporting. So you may have to work out the figure, the value, the numbers. So therefore they will target you that tell us that what is the ultimate, primarily the penalty that will be arising on account of underreporting of an income. So definitely you will have to then calculate what? You will have to then calculate the amount of the penalty. But if you see it over here, there can also be a question that can be put up that we are not interested in knowing what is the amount of penalty, but what we are only interested to know is what is the amount of the underreporting of income. How much is the underreporting that has taken place? If this is the nature of question as to how much is the underreporting that has taken place, then in that case, students, you only need to restrict yourself into the calculation of underreporting which is done under section 270A3. But as I told you, again I am repeating this point again and again, please be mindful of the fact of section 270A subsection 6. Section 270A subsection 6, which we have seen, that is the cases which is not going to be considered as an underreporting of income. The cases which is not going to be considered as an underreporting of income, please be mindful of the fact of this particular point. So now if you all will see over here, what we all get it, students. So over here in this particular section, if the ROI has been filed and the income has been assessed, we have just seen above in 143 it was 16 lakhs, whereas in 143.1 it was 12 lakhs. So automatically the difference between 12 and 16, the difference is 4 lakhs, was considered as an underreporting of income. Isn't it? That was the case. Now, if supposedly the ROI is not filed by whom? By other than firm, company and the local authority. Firm, company and local authority. On all the other cases, the underreporting of the income will then be students, the total income assessed under 144 minus the basic limit. Total income assessed under section 144 minus the basic exemption limit. This point also has been taken by us. Isn't it? And if the income is not assessed for the first time, point number 2. Thereafter, if the income is not assessed for the first time, then in that situation, students, like 147 compared with 143. In our example, 147 was 22 lakhs, 143 was how much? 16 lakhs. So the difference which was there of rupees 6 lakhs, the difference that has been there of rupees 6 lakhs, that difference of 6 lakhs, will that be considered to be an underreporting of income? And the answer is yes. So this is what it is, students. And finally, students, if you see the case for the loss, so that also example I have given it to you, 8 lakhs to 2 lakhs. The difference from 8 lakhs to 2 lakhs, the difference which is of 6 lakhs, students, the difference which is of 6 lakhs was considered by us as an underreporting of income. Is that clear to all of you, students? And that exactly is the point, students. Now comes the last one, but the most important one. How to calculate the tax amount on the underreporting of income. So one by one, students, if you all will see it over here. One by one, if you all will see it over here, students, what do we get it in this context? So where no ROI is filed or where the return is furnished for the first time. Now can you see that, students? What we are doing it? While we have to calculate the tax, like in my example of best judgment assessment of 144, how much it was? 10 lakh rupees. So with 144 being at 10 lakh rupees, we have said that underreporting, however, will be restricted to 7.5. Underreporting would, however, be restricted to 7.5 lakhs. So with that, now when we have to calculate the tax on the underreporting income, why we are calculating the tax on the underreporting income? Because we have to now calculate the amount of penalty, and the penalty amount is based on what would be the amount of tax that will arise on the underreporting of the income. So therefore, while we are calculating the tax on the underreporting of income, how do we then do that? So in the first case where you haven't filed the return of income, in my example which I have given it to you, the return of income was not being filed and the assessment of 144 was rupees 10 lakhs. So in that case, how much would be the underreporting? From this, first you need to reduce. Students, in this particular case, the first and the foremost thing that you need to reduce is the base income limit, so as to determine what is the underreporting of income. But when you will now have to calculate the tax on the underreporting of the income, although your underreporting income is 7.5 lakhs, but at the time of calculating the tax amount, you will have to add that 2.5 lakhs. And on that final amount after additions, which is of rupees 10 lakhs, that the tax amount will be calculated. So underreporting of income is 7.5 lakhs because up to the basic emission limit there is no underreporting of income. But beyond that now, students, which I have given you the example, that in my example where 144 was at rupees 10 lakhs, and thereafter this 2.5 lakhs, students, 2.5 lakhs is your basic emission limit. So you have reduced this 2.5 lakhs to calculate your underreporting of your income. But while you calculate the tax on the underreporting of the income, you need to add it back. Why you are adding it back? For the only reason that if you don't add it back, then the basic exemption limit again will be provided to you, because we are doing a tax calculation. So tax calculation always will be working upon the tax liability that will arise in this case. So in this situation, students, if you all will see, we have to add the basic emission limit so as to avoid the double particular benefit of the basic emission limit. The second particular point is about the loss case. So when you talk about the loss case, which is the example from 8 lakhs to the loss of 2 lakhs. So it was difference is 6 lakhs, or for that matter 8 lakhs to say income of 2 lakhs. So the difference is, say, 8 lakhs. So that is the difference, isn't it? So if this is the case of a loss, then whatever is the difference that arises, whatever is the difference that is arising, that difference will be considered as entirely to be a case of an underreporting of income. That difference, students, will be considered entirely as an underreporting of income. Do you all agree to this one? Yes. So this is what will happen in this particular regard, students. That difference will entirely be considered as the underreporting of the income. Now there is a very unique thing which has been there, and accordingly, that on that underreporting of the income, you will calculate the tax. Students, you have to be very careful that the tax that you have to calculate will be till HEC. The tax that has to be calculated will be till HEC, and on that tax, including the HEC, whatever is the 50% amount or 200% amount, as the case may be, will be the penalty that will be there in this regard. Will be considered as what, students? Will be considered as the penalty. I hope that all of you are clear with this one. Now, students, here if I have to give you the example, I told you about the loss of 8 to loss of 2. In that we have seen that the difference which is there of 6 lakhs. The difference that we have seen, students, is of rupees 6 lakhs. Now, on this particular difference amount of rupees 6 lakhs, students, what is that we have to do? This is deemed to be the total income. And if it's deemed to be total income, then you will calculate the tax liability till HEC, and on that tax liability till HEC, you will then impose the penalty amount. Fine? You will then impose the penalty amount. Loss to profit, Jade, when you talk about loss to profit, see, this is, say, for example, of Mr. A only. Let's take this example of Mr. A. So 6 lakhs is your total income deemed to be the total. This is referred as what? As if it were a total income. So as if it were a total income is what you are considering it. So therefore, in this particular context, on the 6 lakhs, you will calculate the tax. Calculate it normally. And that is up to 2.5 lakhs, nothing. From 2.5 lakhs to your 5 lakhs, it is 5%. So that comes to 12,500. From your 5 lakhs to 6 lakhs, difference is 1 lakh. On that you will apply 20%. Isn't it? So that is a normal calculation that we all do it. That is a normal calculation, students, that we all do it. Same normal calculation would be over here also. And do it till HEC. And thereafter apply 50% or 40% as the case may be. Is that clear to all of you? 50% or 200% as the case may be. But you have to be very careful when the question has got a twist. Supposingly from 8 lakhs of loss, the loss came to 2 lakhs. From 8 lakhs, students, the loss has came to 2 lakhs. 4 lakhs, sorry. So if the loss has came to 4 lakhs, students, in this case, now what you are going to say? You're underreporting, this would be 4 lakhs. Now this underreporting is deemed to be the total income, as if this were the total income. And if it is as if this were the total income, you will then have to calculate the tax amount. You will then have to calculate the tax amount. And if you have to calculate the tax amount, can you calculate the tax on this assumed total income of 4 lakhs? Can you calculate the tax on this assumed total income of 4 lakhs? And the answer is no. You cannot calculate a tax, because as you all know, if you are a resident individual, then there is a rebate of 87A. Don't forget that. If you are a resident individual, students, then there is a rebate of 87A, and because of that rebate of 87A, we shall conclude what? That this tax will become nil, and if tax will become nil, so will be the case with the penalty. So will be the case with the penalty also will then become nil in this particular case. I hope that all of you are clear with this one. Fine. And with that case, we go to the last one, which is an important one over here. So students, if I just tell you about this one only, this example, which I have given it to you. This example, students, of 143, it was 12, and now it becomes 16. Now, as we have just told that, no, this is an underreporting of an income, but let me give a bit of twist in this particular case. The twist, students, is that out of the additions of rupees 4 lakh, rupees 1 lakh is because of a wrong claim, on which, because of the wrong claim on which the SSC has given the SSC has disclosed full particulars. Full particulars, students. So if the SSC has disclosed full particulars, then in that case, students, what will happen? So in this particular case, students, as you all are aware, be careful. What will happen? So in this particular case, students, we can say that. We can say what, students? So here the conclusion would be, indeed, students, here the conclusion would be that you will calculate underreporting is how much? Underreporting now will be not 4 lakhs, 4 minus 1. So on underreporting income plus whatever is 143.1. So you will calculate this 141 is 12 lakhs. So 12 plus 3, 15 lakhs. On that you will calculate the tax till HEC. Till HEC. And this tax till HEC would then be reduced with tax under 143.1. So you will calculate tax on 15 lakhs. That is point number 1. And the second one, students, you will calculate the tax on 143.1, which is on tax on 12 lakhs. So the difference is the tax on the underreporting of income. Tax on the underreporting of income. The difference is the tax on the underreporting of income. When I am using the word tax, I always imply it is still HEC. So therefore, first, students, you will calculate the tax on the underreporting of the income plus what? Plus that 143.1 total income. 141 total income. So on that, you will please calculate the full tax till HEC, and then that tax amount you will then reduce it with the tax that is there till HEC, with the tax till HEC which is there on that 143.1. The difference of these two tax will be considered to be the tax on the underreporting of the income, and on this tax on the underreporting of income you will take 50% or 200% as the case may be. This is how exactly you will do it. I hope that all of you are clear with this one. Just have a look to this particular part, students. The tax calculated on underreporting of income plus 143.1 in my example. So it was 3 plus 12. In my example, students, it was 3 plus 12. And this would be reduced by what? The tax calculated on the income determined under 143.1. And how much is that? 12 lakhs. So tax on 12 lakhs. So this two tax would be reduced, and then you get the tax on the underreporting of the income. And on that tax on the underreporting of the income, you will take 50% or 200% as the case may be. 50% or 200% as the case may be. I hope that all of you are clear with this one. Now comes, students, this 271 AAB, 271 AAC. But before this 271 AAB and 271 AAC, students, be very careful about the scheme of this undisclosed income. Because as you may be aware of the fact that 68 to 69C, 68 to 69D on the contrary, the deemed income that will arise in section 68 to 69D, the deemed income that will arise under section 68 to 69D will be what, students? Will be considered as a deemed income. And on that deemed income, there would be a tax at the rate of 78%. There will be a tax at the rate of 78%, students. Do you all get this one, students? All of you? So this is how the things would be considered. So 68 to 69D. Whatever the deemed income, on that 78%, which is your 115EB. This is the tax amount. I think this much everyone of you are clear. But on that, where would be the penalty? Where would be the penalty? Now the penalty will go either under section 271AA if this additions of 60 to 69D was detected in search. If this additions of 60 to 69D was detected in search, or it will go under 271AA if it is otherwise then by way of search. Other than the search. So 68 to 69D students, can you see that the deemed income that is there in 60 to 69D, on that there is a tax under 115BBE at 78%, and of that particular tax amount then there is a penalty which is imposed under either 271AA or the penalty will go under 271AA. Under what circumstances it will go under 271AA and 271AA? I have already told you that. Fine, students. Now the question is, what is the amount of penalty, students? Under these two sections, what is the amount of penalty? Now this 270 here in students, if you see 271AA, so if I have a look to 271AA students, then my penalty is either 30% of the undisclosed income or it is 60% of the undisclosed income depending upon this case. Now this is also targeted in the MCQ question, students, in your ICAI MCQ booklet. Just read this particular point, students, this box quickly. gone through with this one, students. So in the MCQ question, students, that they provided is something like, you have to always keep in mind these three conditions, because this is what they have twisted in the MCQ also. They have twisted the same thing. Again, I'm repeating, students, 271 AAB, when the income, which income? 68 to 69D income. So if 68 to 69D income, students, if that is detected in the consequence of search, then in respect of that, the penalty would be imposed under section 271 AAB. But if it is detected other than by way of search, like for example, it is like a normal scrutiny assessment, around that point of time it got detected, then in that situation, students, it will be under 271 AAC. Now 271 AAB, students, as you can see, there are two rates. Now again, you have to be very careful. The penalty that is going to be imposed under 271 AAB would be a percentage on the undisclosed income. Unlike in the case of 270A, which we have just seen, that the penalty therein was a percentage of the tax on the underreporting of the income. Here the penalty, students, is a percentage of the undisclosed income. So how much is the percentage? 30% or the 60%, as the case may be. To comply with 30%, students, it's a very difficult task. You can also see for yourself, because these three criteria is as such becomes next to impossible to comply with that. Like the first one says that in the course of search, means while the search is going on, at that point of time you are admitting it, that yes, this is your undisclosed income, and also you specify the manner in which this particular undisclosed income was derived. Now please understand, as I was telling to all of you, when the search takes place to your premises, the people will lose their mind. The people will lose their mind completely, students. And if that is the case, students, once you are losing your mind completely, once you lose your mind, students, completely, then in that particular case, do you think that you will be in a position to tell or even admit that this is your undisclosed income? You don't know how to react. And that is the reason why this will be giving you a lot of damage. You will remain silent, or you will just say something which the AO or the search officer will not believe on you, in which case the first condition is not satisfied. And if first condition is not satisfied, your penalty will then be at 60% of the undisclosed income. So all the above three conditions should be satisfied cumulatively if the penalty has to be 30% of the undisclosed income. All the three conditions has to be satisfied cumulatively if the penalty has to be 30% of the undisclosed income. Now other than the first point, the second point is that he will have to substantiate the manner. And the third and important point is that he will have to pay the tax along with interest in respect of the undisclosed income, and furnishes the return of income declaring such undisclosed income therein. Tax along with interest, students. Do you know, students, in MCQ what these people have done it? Are you aware of this one? In MCQ what ICAI has done it? ICAI has said that he has paid only tax but not the interest. So if you have only paid the tax but not the interest, do you think that your rate will then still be at 30% of the undisclosed income? Do you think that your rate will then be still at 30% of undisclosed income? And the answer is no. Such a minute default, students, will make you suffer the most, and you will end up looking at 60% of the undisclosed income instead of 30% of the undisclosed income. You'll end up looking at 60% instead of 30% of the undisclosed income. I hope that all of you are clear with this one. So this is what it is, students, and that exactly how the things has to be looked upon. Five truths. Perfect. What about 271 AAC, students? 271 AAC. As I was telling you, 271 AAC. This is about the tax. This is a penalty of 10%. 271 AAC is a penalty of 10%, but which is on what, students? This penalty of 271 AAC is 10% of the tax on 115BB. So the tax on 115BB, which you all are aware of it, on that tax portion, 10% is what is the amount of penalty under 271 AAC. 10% is the amount of penalty under section 271 AAC. Is that clear to all of you, students, now in this case? Now I'll just read this question, and through this question itself you will come to know what should be the approach. This is the RTP question, students, which I have kept it over here. So let me in fact put up this particular question, and then on that basis we will know what would be the answer. Mr. Rajiv is a retail trader and his total income for the last few years ranged between 8 lakhs to 10 lakhs. He celebrated his 25th wedding anniversary on a large scale on 2nd December 2021 by hosting a cruise party in the luxury cruise liner Ocean Princess, for which he spent rupees 30 lakhs. For which he has spent rupees 30 lakhs, students. The assessing officer in the course of the scrutiny assessment of Mr. Rajiv, students, asked him to explain the source of the expenditure. In the course of search or in the course of scrutiny assessment? Is it in the course of search or in the course of scrutiny assessment? It is in the course of scrutiny assessment. And they have asked you to tell us the source from where you have incurred the expenditure. The explanation offered by the Rajiv that the same was out of the saving from the last few years was not found to be satisfactory by the AO primarily. And if it is not found satisfactory, it will be considered as an unexplained expenditure. If it is not found satisfactory, students, then in that particular case it will be considered as the unexplained expenditure, and because of that reason this will have the penalty at the rate of 78%, the tax at the rate of 78%. And how about the penalty? The penalty will be now under 271 AAC. Why? Because the detection is because of what? The detection, students, is on account of, is it on account of search? No, it is other than the search, and hence the penalty in this case would be under section 271 AAC. I hope that every one of you are clear with this one, and that exactly is the point, students. So this is it, students. Now the deemed income, students, this I consider to be the important one for your examination, students. 68. So just be very careful about this so far as your examinations are concerned. 68 could be one of the potential questions that can be targeted. Very quickly, students, this is just receiving a money in your books of accounts on a credit. Credit means primarily, like for example, loan amount or even a share capital is a credit. Students, even a share capital is a credit, or a loan amount which is received through a loan, even that is a credit. So whenever these transactions, students, takes place, whenever these transactions will take place, students, the department will make it. So the department will always ask you the questions. 3 questions is what they will ask you. Always keep in mind, students, the department will ask you the 3 questions, and the 3 questions would be the identity of the person who has given you this loan amount or who has subscribed to the share capital. So that is about the identity. Second one would be about the capacity. The person who has given you this particular amount, is that particular person a person of means? What do you mean by a person of means? Means, is he a person who is capable enough to give you this much of the amount? And the third one is about what? The genuineness of the transaction. So one is identity of the person giving you this amount, second is the capacity, and the third one is about the genuineness of the transaction. So only when these three criteria are being satisfied, that the provision of section 68 will not be invoked. But if any one of the criteria is not satisfied, then in that particular case it will be considered as a deemed income. It will be considered as a deemed income under section 68, in which very case this will result into the tax at 115 BBE at 78%, and on that a top-up penalty of section 271 AAC or 271 AAB, as the case may be, will be imposed. Is that clear to all of you? Now, why it is such an important particular question, students? This is because of this proviso. This proviso, students, is a very important proviso, because what it does essentially, students, are you aware of that? What it does, students, essentially, you should be knowing this, for students. You all should be knowing this, for students. So what it does essentially is that this particular section is trying to tell you this particular point. What particular point? That look, if a private company, students, if a private company is the one who is receiving the share capital from its resident shareholder. Keep in mind this point, so this is going to come in the exam. If a private company is receiving the share capital from resident shareholder, then the onus will be on the private company to disclose the source of the source. To disclose what? To disclose the source of the source, meaning thereby they have to, the compliance for the private company will go one step forward. So say for example, there is Mr. A who has subscribed, Mr. A who is a resident of India, he has subscribed to the share capital of a particular private company. Then the private company will also have to see or verify from where Mr. A has got this particular money to subscribe to the share capital. So the trace has to be done. The trace of the money received by the private limited company should be not only restricted to who has given the money to this private limited company, but also from where or what is the source from where this particular money has been received by this particular private limited company, by this particular Mr. A, the shareholder. So the source of the source is also to be explained by the private limited company. Only then provision of section 68 will not be invoked. Where there is a failure on the part of the private company to disclose the source of the source, in that particular case it will be considered as a deemed income, and the moment it is considered as a deemed income, students, accordingly the tax at 115BB and the penalty thereafter under section 271AA or 271AA as the case may be shall be imposed. Is that clear to all of you students now? All of you, quickly students, confirm. Jade. Students, one more section is that 271AA. No, this is a 271AA. One section is also there. Just I want you to read this one. Mamta. Students, just one more question of the RTP. I'll just see the other question that we discussed was about applicability of 271AA. Because that 68 to 69D income was detected in the scrutiny assessment. See what happens over here. 15th of January, search was conducted in the premises of Mr. Rana, a jewelry manufacturer. The AO found 50 lakhs as cash, which was comprised of the demonetized currency note, 501 unexplained jewelry. So these are the cases of the unexplained money, bullion, which is also covered in 60 to 69D. Unexplained money, bullion, jewelry. So these are also covered in 60 to 69D. Worth of 2 crores and unaccounted property documents valued at 80 lakhs were found. So in this case, friends, the penalty that would be imposed would be under 271AA. So the tax under 115BB on these undisclosed portion, and the penalty will not be under 271AA, but it will be under 271AA. Now there are two situations which have been given to you, A and B. Just read it out, students, quickly. all of you. I'll give you 2 minutes time. So the 2 cases are given to you. And the case 1, students, he has not disclosed the income in the return of income. And if that is the case, students, you all know the rate would be on the higher side, 60%. And in second cases, students, he has complied all the criteria which is required for a lower rate of penalty at 30% of undisclosed income. And that is what this case B is all about. That is what, students, this case B is all about. So with that, students, we are done with this particular point. Now comes your cash penalty. Can you see that, students? The cash penalty. Now, this is also one of the questions which ICAI has been targeting it again and again in the MCQs only, students. So in the recent MCQ also, they have targeted the question. Now, in this regard, students, I think all of you are aware of the fact that no person will accept from the other person. Students, no person will accept from the other person what? A default loan. We will not accept from the other person a default loan, deposit or the specified sum if what? If either A or B or C is greater than or equal to 20,000. So no person, students, which you can see over here. No person, primarily which you can see over here, can accept a default loan. Can accept a default loan. Many students will say, sir, what is default loan? Default loan, student, means that the loan which you get it in cash or bearer check. So these are a default loan. So the no person can accept a default loan, deposit or specified sum if either A or B or C is 20,000 or above. So if the either A or B or C will touch 20,000 or above, then you have to ensure that you don't have to cross that limit of 20,000 and do whatever is required, but do ensure that you cannot take a default loan if either A or B or C will touch 20,000 rupees. So what exactly it is A or B or C? A says that, students, the aggregate of such loans, means such loans with the such loan in this example, students, is the default loan. The default loan. So if the aggregate of the default loan, so if the default loan which I have taken, that itself is 20,000 or above, so you will ensure that you will not take any further loan which will aggravate the situation. How it will aggravate the situation? It will then be considered to be a case of a default under section 269 SS, resulting into a penalty under section 271D. The second point number B, students, that you are seeing over here is that that if on the date of taking, students, if on the date of taking such loans deposit or specified sum, so if on the date of taking such, again the word such is there, which means that the cash loan deposit or specified sum, so if on that particular date already any loans or deposit or specified sum which was taken earlier is remaining unpaid, and how much is that unpaid? 20,000 or above. So if any outstanding, so when you talk about any outstanding, it can also be considered as a check. So even in that particular case, it will be a default. So say for example, already an account pay check, through an account pay check, I have taken a loan which is outstanding of say rupees 21,000 rupees. That is it. Now if it is already have touched 20,000 limit, any loan has touched as on the date of taking a default loan, any loan has touched the limit of 20,000 or above and it is outstanding, then you will then be restricted to take the default loan. So if supposedly in this example, after taking the loan of 21,000 rupees, if there is an extra 2,000, students, if there is an extra 2,000 in cash, if there is extra 2,000 loan, I have taken it in cash. I have taken this loan in cash, students. So if this extra 2,000 rupees, if I have taken it in cash, students, I think all of you are aware of this one now. If I have taken this amount in cash, students, what is your take? So a cash loan of 2,000 has been taken, students, in this regard. So will this also be falling in the same ambit? Can we say the same thing now for this one also? And the answer is yes. Answer is yes, students. We will definitely say the same thing for this one also. And what is that, students? We will say that this is all now. This is a default which the SSC has done. The fact that there is already an outstanding loan pending as on this date of 21,000 rupees, the SSC should not be taking any loan. Loan can be taken, but don't take up the loan in a default mode. And where you have taken the loan in a default mode, it will result into a penalty of 271D. And how much will be the penalty, students, in a 271D? The penalty would be, students, equal to the default loan. The default loan that you have taken, and how much is the default loan that you have taken? 2,000 rupees. This would be the amount of the penalty. The penalty, students, would be imposed only by the JCIT. 271D penalty can only be imposed by whom? By the JCIT. So just keep this officer in mind. For cash penalty, students, a thumb rule. In all the cash penalty section, just you can write it one thing, that in all the penalty on cash transactions, the authority who will impose the penalty would be the JCIT. The authority who will be imposing the penalty would be the JCIT. Fine, students. All of you through with this one. So this is what it is, students, so far as the penalty is concerned of this rupees 20,000 rupees. Now coming to the next particular point, students. Supposingly if my loan is 15,000 rupees and I have taken through account pay check. This loan I have taken through an account pay check. How much of loan I have taken through account pay check? 15,000 rupees. After taking this particular loan amount, students, thereafter there is a cash loan. Cash loan which I have taken is of rupees 6,000. There is a cash loan which I have taken is of rupees 6,000. I want to take a cash loan. So what you say? Now, students, if you see over here, as on the date of taking the cash loan, the outstanding loan is not 20,000 or above. But if I add this cash loan with the outstanding loan, now whether both of them, will it touch 20,000 or above? And the answer is yes. So the aggregate of A and B above. So if I now add this outstanding loan with the cash loan of 6,000, in that particular case, it touches the magical figure of 21,000. And the fact that it is touching the magical figure of 21,000, will this also be considered in the same line to be a case of a default? And the answer is yes. It will also now be considered to be a case of a default, and this is what it is, students, in this regard. I hope that every one of you are clear with this one. Are you all clear with this one, students, now? So in that case, if the SSC still insists to take up this loan of 6,000 rupees, if the SSC is still insisting on taking up the loan of 6,000 rupees, fair enough, go ahead, take up the loan, no issues. But then in that case, be ready for the imposition of penalty. Be ready. Students, just confirm this audio video is fine. Now it is fine, isn't it? Jade, Babda. So there was a bit of this thing about the internet connection, but I think now it is resolved. Fine. So now if you see, students, on the repayment part. So on the repayment part, students, what is the scenario? The situation is like this. I'm talking for the repayment perspective, students. Supposingly, students, there is an outstanding loan of 19,000. The interest accrued also is outstanding. If sales of rupees 3,000. Okay, this is the situation up till now. Now repayment is done of 2,500 in cash, of which rupees 500 is for interest amount. Rupees 500 is for interest amount. So the repayment of 2,500 in cash is done, of which rupees 500, students, is for the interest amount. Did you all got this one? All of you? Now if you compare this with that, you have to be extremely careful, students. Be extremely careful in this sort of a proposition. And what is that? Now that we have this particular repayment of rupees 500. Now that we have this repayment of rupees 500. Now first of all, tell me, we are talking about 269T. That is the repayment of the loan. Again the same thing. The default, you cannot repay through the default mode in cash, which is the cash mode or the bearer check. That becomes the default mode. Here what you have to be very careful is, you know what is the care that you have to see? To check the threshold of 20,000 above. To check the threshold of 20,000 above, you have to even take into account the outstanding interest. You will have to even take into account the outstanding interest to see whether the threshold of 20,000 has it been reached or not. Whether the threshold of 20,000, students, has it been reached or not, that also needs to be taken into account. That also needs to be taken into account, students. Is that clear to all of you? All of you are clear with this one? That is point number one. Point number two is this, that however, so far as the penalty is there, so far as the penalty is concerned, students, the penalty would only be in respect of the loan amount so repaid. If you don't believe this, I will just share to you. Penalty is equal to what? Loan deposit or the specified sum which is repaid. So the penalty is in respect of the loan deposit or the specified sum which has been repaid. So see the difference yourself. So while taking into account the applicability for which 20,000 threshold has been reached or not, for this reason we will also include the outstanding interest. But thereafter, students, so far as the repayment of 2,500 is concerned, can you see this one? The repayment of 2,500 in cash, of which 500 rupees is for interest amount. This particular part of 2,500, you will always consider that only the loan portion which is repaid you will only consider the loan portion which is repaid for the purpose of deciding the amount of penalty. So the extra 500 rupees which is there, which is representing the interest portion, will not be considered for the purpose of deciding the quantum of penalty under section 271E. Under section 271E. I hope that every one of you are clear. So therefore in this case the penalty would be under section 271E would be how much rupees? Rupees 2000. Be very careful about this one, students. So this is what it is. Other than this one, students, other than this one, if you can have a look over here, is about some non-applicability. Some non-applicability. So you may therefore ask, sir, what about non-applicability? One of the non-applicability students they have targeted in the examination in recent past. One of the non-applicability students they have targeted in recent past. Do you need to know that one? This is what it is. Students, when the lender as well as the borrower, both of them happens to be agriculturist and who don't have any other source, then in that particular case for these lender and the borrower, students, what is the situation? The situation would be that if both the lender as well as the borrower are having only the agricultural income, then such loan, deposit or specified sum will that attract the penalty under section 271D or 271E? And the answer is no. Even though the loan and advances has been taken in cash mode, the default mode, doesn't matter. The condition above will not be applicable for the purpose of this particular point. It implies that no imposition of penalty on such loan transaction which is entered by whom? By the agriculturalist. Apart from that, in your ICAI, students, be careful. In your ICAI MCQ, they are brilliant students, I must say that. See, from the banking company also, if supposedly you have taken a loan, say students, if you see about in this context, can you see this one? Say if you have taken the loan from a banking company, if you are taking the loan from whom? From the banking company. Then in that situation also, such loan that you are taking it from the bank or the repayment of the loan to the bank, so from the bank or to the bank, obviously now since it is already hitting to the banking channels, so if the loan deposit or specified sum is being taken from the bank or it is repaid to the bank, and even if the mode happens to be the cash mode or the bearer check mode, still it is fine, not an issue. Still it is fine, students, it is not an issue at all. Can you see this? It is not an issue at all, students. This is how the things has to be looked upon. This is how, students, it has to be looked upon. Okay, so that cash mode can be considered, even though in this case the cash mode can be considered without any further consequence of the penalty under these respective sections. Under these respective sections, students. I hope that all of you are clear with this one. Every one of you. Are you all clear with this one, students, now? All of you. And that exactly is the point. That exactly is the point. So with this particular thing, students, we have dealt with this particular proposition. Now then, if you all are through with this, now then, students, if you all are through with this one, students, I'll tell you the ICAI MCQ question. ICAI MCQ question, they have targeted in NBFC, non-banking financial company students. NBFC question they have asked that from the NBFC this loan has been taken, or from NBFC the loan has been repaid, and the loan taken or repaid is in the default mode. Loan taken or repaid, students, is in the default mode. Please do tell me then, in that particular case, whether you will still go by students, whether you will still go by what? This particular default mode? Please tell me this. In this case, or whether the exception will it be applicable. So whether if the loan has been taken by NBFC or the loan is repaid to the NBFC, in that case also you will apply the exception or you will impose the penalty. You will apply the exception or you will impose the penalty. In that case, students, be careful. You will have to then impose the penalty. You will impose the penalty. The exception is only for a banking company. I hope that all of you are clear with this one. The exception, students, is only in respect of a banking company. With that, students, we are done with this particular proposition. In this scenario. Now, students, as you all are also aware, 260 ST, the consideration which has been taken in cash. 260 ST, students, the consideration which has been taken in cash. 2 lakhs of the consideration. Remember that, students, the 2 lakhs of the consideration which you are taking it in cash. I think all of you are aware of even that particular point. The 2 lakhs of the consideration, students, which has been taken it in cash. This is also something which is known to all of you. So here, students, if you talk about it, I'll just tick mark some of the important other particular points which are there, like this in this list which has been there, the bird's eye view. The bird's eye view, students. So in this list, students, which has been given to you, what is 271A? The remaining penalty, students, apart from what we have discussed. 271A. This is for if supposedly 44AA is applicable. Students, 44AA is applicable. And even after the applicability of 44AA, you are, students, be careful. Even after the applicability of section 44AA, students, you are not. Students, even after the applicability of the 44AA, students, you are not maintaining the specified books. You are not maintaining the specified books of accounts. Then in that case, there is a flat penalty of 25,000. This is 271A for you. How about then the other one? 271B. For 271B, students, it talks about 44AB, the tax on it. So where the tax audit was applicable, but you haven't taken or done the tax audit in this regard, then students, in that case also, students, the penalty would be imposed. That penalty would be under section 271B. How much is the penalty? I think all of you are aware of that. 0.5% of the total turnover, primary, or the rupees 1.5 lakhs, whichever is lower, students. Whichever is lower. So in this particular context, students, herein 0.5% of the total turnover or rupees 1.5 lakhs, whichever is lower, this becomes the penalty which would be imposed under section 271B for the failure of the tax audit under 44AB. I hope that all of you are clear with this one. Every one of you. Fine, students. Other than this, students, transfer pricing penalty accountant report. I think this is something that was already being captured in the transfer pricing chapter. We have already taken that into account in the transfer pricing chapter, but still I'm just making a remark for your observation. Though you can say that, sir, this was already covered in our TP revision lecture, so be it. I'm just ticking mark the important penalties other than what we have discussed just now. That is about the accountant report, students. This is 1 lakh. Now, students, before we proceed further, one very important question is asked. Expected question, students. Expected question. Supposingly, students, I had to maintain the books of accounts under 44AA. I had to maintain the books of accounts under section 44AA. But I haven't maintained the books at all. That is also a possibility. I had to maintain the books of accounts students under section 44AA, but I could not maintain the books at all. So in that case, 25,000 penalty would be imposed. 25,000 penalty would be imposed for the failure to maintain the books. At the same time, students, at the same time, my turnover was also more than rupees 1 crore. My turnover also was rupees 1 crore. So obviously, because I could not maintain the books, I could not get it audited. Because I could not maintain the books, I could not get it audited. So therefore, the question is that whether the penalty under section 271B also will it be imposed? Whether the penalty under section 271B also will be imposed. So this was your RTP question. Expected question. That is the reason why I am telling to all of you. And the answer, student Jade, is no, it will not be. It will not be, students. And that exactly is the point in this context. So see, there is one case law of Guwahati High Court which they have used it. So what is that? Mamta, you don't have to remember the name, but still it is important in this context. When a person commits an offence by not maintaining the books of accounts as contemplated in 44AA, the offence is complete, and after that there can be no possibility of any offence as contemplated by 44AB, and therefore imposition of penalty under 271B is erroneous. Students. I hope that every one of you are clear with this one. And this is exactly the point. Fine, students. So this is how the things has to be considered. Students, before I proceed, I'll just put to your notice some important observation. Since I'm doing this MCQ class and the case study class, one very popular point which has been observed, and I'll just share with all of you. But students, I'll still will give you the link. By today evening, students, you'll get the link in the description box of this video. I'll give the link of all my previous revision videos with the topic name, and also I will give you the link of the case studies which I'm doing it presently. In fact, if possible, students, today 5 p.m. also 5:30 p.m. also I'm doing the case study of the non-resident taxation and transfer pricing. These are the heavy case studies. If possible, do attend that so that it eases out your pressure on that particular context. And now again, I'm repeating, this is around 12 hours study material, 12 hours lectures, but it's worth it. Why it is worth it? Two reasons. First of all, out of the 30 marks of your this thing, 15 marks will definitely come from here only. One. And second, and more importantly, it enables you a revision of your entire syllabus. Yes, Jed, you can ask it out. While I'm saying, you can ask it out. So it will be like revising the entire thing. So please don't miss out on this. I'll share you the link also in this description box. Don't worry about that. Now, friends, one of the very I'm talking about it because see, we take it very casually, certain things. Very casually we take up certain things. And ICAI, in two places they have targeted in the MCQs. And what was that? Students, remember there was one TDS section we were doing other day, 194Q, the previous lecture. Before the assessment, we did the TDS section, isn't it? So in that TDS section that you all are aware, we have also discussed about 194Q and also 206C1H. Remember that 50 lakhs above consideration paid or the 50 lakhs above the consideration received. So the TDS for the buyer, TCS for the seller. That is one thing that we have discussed. Apart from that, friends, we also have discussed. Now, apart from that, if you remember 194O, in the case of an equalization levy, in that case also there is a case of something of 0.1% equalization levy. 194O is the e-commerce operator who is making the payment to the e-commerce participant. On that, the TDS would be at say 1%. So that is a rate that we have seen. Now, students, supposingly we don't furnish the PAN in these cases because the rate is very nominal, no? 0.1%, 1% is the rate kind of a thing. If the PAN is not furnished, so in these sections, students, we have found that the penalty that would be imposed, the higher rate So the higher rate that will be there would be at, how much will be the higher rate? If you all can recall it, 5%. Don't take 20%. For them, it is not 20%. I hope that all of you are aware of this. For those cases, students, it is not 20%, it is the 5% rate. Are you aware of that one or not? For those cases, if you don't furnish the PAN, then please don't push them to the 20% brink. This is cruel to push them to this 20% brink, isn't it? So therefore, here you can see 194O, 194Q. These are the cases for TDS. So in that particular case, 5% is the rate. Can you see that? Please keep in mind this one, huh? And also show 206C1H. The TCS. If PAN is not furnished, then the TCS under 206C1H. 206C1H. That 50 lakh seller. Remember that? So there also the TCS will then be collected at the rate of 5% of no PAN case. I think this is the background which is sufficient. Expected questions, students. You remember this session, this time, this moment that we were discussing this, and this is what came in the examination. Now, students, what has happened? That the SSC he didn't have PAN, but he gave the Aadhaar card. He didn't have PAN and he gave the Aadhaar card. Question therefore is whether 5% of the rate will be applicable or 0.1% rate will be applicable. This is the issue under consideration, whether 5% rate will that be applicable or 0.1% rate will be applicable. What is your take? Mamta, Jade. 5% would be the rate that will be applicable, students, or it will be 1%. Quickly. He has given Aadhaar. Students, he has given Aadhaar card. He didn't have PAN. So he gave the Aadhaar. So on non-furnishing of it, will you push him for the 5% rate or 0.1? It has to be 0.1% only. Did you all got this one? All of you? And that exactly is the point. So 0.1% only shall apply. Don't make him suffer with a rate of 5%, because as you all know, interchangeability of PAN with Aadhaar. Are you aware of that? The interchangeability of PAN with Aadhaar. So that is the point to be considered. So the PAN, can that be interchanged with the Aadhaar? And the answer is yes. And that, will it be considered to be the sufficient compliance? Wherever was PAN that was required to be furnished, if instead of PAN, if I furnish the Aadhaar, will that be considered to be a sufficient compliance? Yes, it would be. And therefore, no higher rate would be applicable in that regard. No higher rate that would be applicable in that regard. I hope that all of you are clear with this one. What about the fact that instead of this, I gave the driving license? Because last time only I was discussing this case study. What about this one? Instead of this, instead of PAN, he gave driving license. Will that help him to still retain the lower rate? Will that help him to still retain the lower rate? And the answer is no. If you give a driving license, then the higher rate of 5% will be applicable. Did you all got this one, students? All of you. And that exactly is the point. Now I'll take up your query, Jade. In case of section 68 in capital contribution, if partner fails to explain the source, in whose hands? It is double whammy. Jade, this is known as double whammy. You'll say, sir, what is double whammy? It sounded good, but what is the meaning of it? Double whammy means the partner will also bleed, so will be the partnership firm. Partnership firm will bleed in 68 because they are not in a position to explain the source. That is the reason. That is how partnership firm will bleed, because they have got a credit. And partner will also bleed in a different section, and that section is known as unexplained investment. Unexplained investment. So there the partner will bleed, and that will be considered as a deemed income, and both of them will have the company in 115 BBE, and also the penalty under section 271 AB or 271 AC as the case may be. I hope that all of you are clear with this one now. All of you students, that exactly is the point. So students, with this we have done with this particular proposition. Now students, after this one more lecture is only pending. That one more lecture would be appeals revision. Okay, that one more lecture is appeals revision, some miscellaneous area. So by virtue of that, which I will keep it mainly tomorrow. I will keep it, tomorrow. Most students, tomorrow I'll try to keep it. That one session which I'm talking about it right now with all of you, I'll try to keep it tomorrow so that we are done with the entire segment. We are done with the entire segment, students. And how many marks will be covered? 75 to 80 marks. I think then after, up till then, 75 marks, 70 marks, I can say coverage of revision is done. And then I will go to my last league. Can you tell me which is the revision that you will want on a priority after this, after the assessment and appeals is done? Like the topics which are there, so I can accordingly plan. Alternate tax regime is there, MAT is there. Thereafter, alternate tax regime, MAT is there. Thereafter, PGBP is also there. And chapter 6A, small deductions. So if you want, I can accordingly start sequencing those particular chapters on that particular way. And capital gains. Now 271C students is about what? The TDS default. Can you see that, students? MAT. Fair enough. I'll do the MAT first. 271C is about what, students? Can you see this? So I'll do first MAT, alternate tax regime, then chapter 6A, and then capital gains. This is a sequence then which I'll adopt that. The 271C students, which you all can see over here, is about what? Can you see that, students? TDS default, I told you just now, no? That if supposingly there is a failure to deduct the TDS. There is a failure to deduct the TDS. That is point number 1. And second one, students, is about what? That there is a failure to deduct the TDS. Or if you have deducted the TDS, but you have not deposited it. So the penalty is equal to the same amount. The penalty is equal to the same amount, students. Isn't it? Now this is what I was talking about, the cash penalty, students. I think all of you are aware of this particular penalty. 271DA. Are you aware of that, students? So 271DA penalty, as you can see, is in respect of what? Okay, students, one point which I just will tell you. Somehow this is such a thing which is there, and I don't know, students are going to suffer, students, in the examination. Big time they are going to suffer it. So why I'm saying so, we actually only think from the TDS point of view. We never think from the TCS point of view. Students, you have to just be very careful, because by the time we do TCS, we only do the substantive section. There are some of the key points of TCS that you should be careful about it. Like for example, the quarterly statement. If you remember, students, the quarterly statement of TDS has to be filed. The quarterly statement of TDS has to be filed by when? Are you aware of that? Every quarter, like June, it will end by 31st of July. For the quarter ending September, it has to be filed by 31st of October. For the quarter ending December, it has to be filed by 31st of Jan, and so on. But for the TCS, students, for the quarter ending June, it has to be filed by 15th of July. Quarter ending September, 15th of October. Only 15 days period is there for the statement. And if supposedly there is a failure, to file the statement within the due date, then the penalty is the same. Don't worry about the penalty. 100 rupees per day, which is actually the late fee kind of a thing. It's a fee actually, 224E. But the point which I'm trying to tell you is that we actually are so much possessive of the TDS that in TCS we only do the substantive provision, the normal provision, 206C and all. But we don't like to do the procedure, and ICAI knows this fact. Students, ICAI knows this fact, and I always fear that it is not that difficult, but just that you haven't done it. Because you haven't done it, therefore you've suffered. But if you applied some common sense and logic, would have made a life out of it. So TCS also, students, the same thing is there. Supposingly there is a TCS obligation and there is a failure on my part to collect the TCS, even though I was under the obligation to do so, then I, being the seller who should have been collecting the TCS, on such failure, I will then be subject to a penalty. I will then be subject to a penalty, students. Do you know the amount? The penalty, students, as you all know, would be equal to the failure of the TCS amount. So whatever is the TCS amount, the same amount would be the amount of the penalty. Second point, students, remember HEC. Do we load the HEC? So far as TCS is concerned, we don't load to the whatever is the rate that has been given to you. On that rate, do you load the HEC? No. But if the person from whom you are collecting the TCS, if you are collecting the TCS happens to be a non-resident or a foreign company, then in that particular case, whether the loading of the HEC will that be done? And the answer is yes. In that particular case, students, the loading of the HEC will be done. I hope that every one of you are clear with this particular point. All of you. And that exactly is the situation, students. So this is how the things has to be looked upon in this context. So we are done with this particular proposition completely. Now 271DA, students, all of you just make one equation here, 271DA. This is actually a very important one. And I will link it with something which I'm going to do with you, all of you. Just be very careful about this section. These are the very important sections and the most likely section. It can be there anywhere, be it in MCQ or we don't never know. This is about the consideration received. Students, if you talk about the consideration being received, the manner in which the consideration, the compliance of consideration, the consideration, when you receive it, students, what are the provisions that is there? Have you realized? Analyze this one. So consideration when you are receiving it, students, consideration you are receiving it. In that context, students, you have to be careful about some of this thing. So there is a cash consideration. In cash, so there is the 260 ST. There is a 260 ST default. Then the consideration received in excess of 50 lakhs. Then there is a TDS compliance of 206C 1H. 206C 1H. TCS collection. Just hold on. I'm just writing here. Have you all done with this, students? And then there is 165A on the equalization levy. Sorry, 165. If it is greater than rupees 1 lakh, then equalization levy. Section 165. Are you aware of this, students? So these are the special points so far as the considerations are concerned. I hope that all of you are aware of this one. Equalization levy is attracted. So just be very careful about this particular point, students, about the consideration becoming a threshold then. The consideration becoming a criteria. So the criteria is this. Fine, this is why this point is very critical. Now, coming to 271 DA, students, 278 DA will be applicable if supposingly you are receiving the consideration 216 ST default received the consideration in cash or say bearer check. The situation which is covered from 1%, it can be in respect of more than one transaction, aggregate, this aggregate side. I have received the consideration from one person, single person. That consideration is for more than one transaction, but it is for a single day. On a single day, I have received the payment. So aggregate of more than one transaction on single day. So consideration, receive consideration cash or bearer check in excess of rupees 2 lakhs. Not in excess of, equal to, greater than or equal to. Student, can you just write here greater than or equal to 2 lakhs? Above statement also you just correct it appropriately. Make it greater than or equal to. So 1 person aggregate of the transaction plus single day. Second one is a case wherein from 1 person may be a single transaction, but that amount has been, I'll give you the example also, but that amount has been given in various days. And the last is 1 person and maybe it can be aggregate of transaction, aggregate of days, but for one event. 1E is one event. I'll give the example to make it just very comprehensive in this regard. This is such an important particular stage that you are in. Penalty is something, a topic which students doesn't like it. Somehow they are fumbling in this topic badly. Have you all done with this? Now I'll give you the example also, don't worry. Supposing I have done a transaction, students, with you, or you have done a transaction with me, and amount is 3 lakh rupees. One single, or maybe let us do this way. I'll first twist the question. We have done with each other 5 transactions. Each transaction value was 50,000 rupees. Okay. Now, you have to pay to me. How much now? 2,50,000 rupees. 2,50,000 rupees you have to pay. So, on a single day, you come to my place. On a single day, students, you are coming to my place and you are paying me 2.5 lakh rupees. On a single day, students, you are coming into my place and you are paying rupees 2.5 lakhs. So whether, and that too in cash. So whether this would be a default of 269 ST, whether this would be a default of 269 ST, the answer is yes, it would be. It will be a default, students, of section 269 ST, and that exactly how it would be considered. Come to the second point. Second point. Let's say that no, it is only one transaction, only you have done it. Only one transaction you have done it, and that transaction, students, is of 3 lakh rupees. but you are paying me the amount in 6 different days at 60,000 each, 50,000 each. So 50,000 each, but on 6 different days you are paying me. So in that particular case, 50,000 each. On 6 different days you are making the payment to me. So in that scenario, in that case, whether that is also, and that too in cash. So whether it would be a default of 260 ST, whether it would be a default of 260 ST, and the answer is yes. And the last but not the least, students, is in respect of, supposing there is an event, and for that event you have entered with me 5 transactions or 3 transactions. Which 3 transactions? Like catering transaction, mandap keeper transaction, and then some arranging of cars and all, the car and all, the motor vehicles and all. So even that transaction, for that event of marriage, you have signed with me the 3 contracts. For each contract I am charging you rupees 1 lakh. For each contract, students, I am charging you rupees 1 lakh. And if that is the case, students, if for each transaction, if I am charging you rupees 1 lakh, then, and you are paying to me that 3 lakh rupees, 3 lakhs in total, in cash. And you are paying me not on a single day, but spread over across the days. So, one person, you are paying me aggregate of transaction, 3 transaction is there in this case. Aggregate of days, I told you that spread over. But in respect of one event, which is the marriage function. And the total in aggregate of the cash consideration has touched 2 lakhs or above? Yes. Will this be a default? Yes. How much is the penalty? How much is the penalty, students? This is about the case of default. Penalty under 271 DA is equal to the cash the consideration received. So the entire consideration that you have received, students, will be a penalty. Whatever consideration, students, that you have received will be the penalty. Can you see this? This is such huge, isn't it? And severe also. This is what it is. 278 DA for all of you. By the way, one very interesting point, I should tell you that the person who is receiving the cash consideration of 2 lakhs above, and if he is also subject to a tax audit, so you are paying me a consideration of say rupees 2 lakhs or above, and students, I am already subject to a tax audit of 44 AB. So apart from the fact that I am going to be 44 AB has got nothing to do with my penalty of 271 DA. That penalty of 271 DA, any case, I am going to suffer it. But what is going to happen now is more interesting thing, students. You want to know about that interesting point, students? What is going to happen, students, now is going to be a very interesting thing. And what is that, students? What is that? The most important point that is going to take place, students, now would be, are you aware of that, students? That because of my tax audit, the fact that I have taken the cash consideration in excess of 2 lakhs, that is fine. But because of the fact, students, because of the fact of what? That I am also subject to a tax audit, I would be under an obligation. Do you know what is an obligation that would be there on me? That I have to file a statement of financial transaction. I have to file a statement of financial transaction or the AIR. So the AIR or the statement of the financial transaction also would be required to be filed by me, students. This is an additional compliance which I need to do apart from the penalty which I am going to pay under section 271 DA. I hope that every one of you are clear with this particular point. This is such a dangerous thing. Now, students, if you know that about the statement of financial transaction which has been there, you all are aware of it, the statement of financial transaction, isn't it? Now, what happens over here is that, be careful. The statement of financial transaction. There are list of transactions which has been given to you. Students, which has been given to you. There is a list of transactions which has been given to you. You will say, sir, to by heart those numbers are very difficult. Don't worry. Just remember like this. 10 lakhs is the figure, you just remember it. like all the banking transactions of depositing the amount, withdrawing the amount. In aggregate you have deposited, or in aggregate you have withdrawn. How much you have deposited in aggregate? Say 10 lakhs. Or how much you have withdrawn in aggregate? Say 10 lakhs. Or maybe a credit card payment expenditure. Again, that in aggregate is 10 lakhs or above. Fine. Or maybe you have subscribed for the shares and the securities of the company. That is also the case. 10 lakhs above. So 10 lakhs is the threshold that you keep in mind for the requirement for these person to file the AIR. Okay, requirement for these person to file the AIR. Now the next question that comes, students, is this: that up till by when the AIR has to be filed. Up till by when the AIR, students, has to be filed in this case. So the AIR has to be filed in this context, students. In this context, students, the AIR has to be filed, students, in this context by when? Did you all got this, sir? So in this case, by 31st of May, students. By 31st of May, you will have to file the AIR, and that exactly is the point. By 31st of May, students, you will have to file the AIR, and that exactly is the point. So I hope that all of you are clear with this one. All of you are clear with this one. Okay, now the penalty which is to be imposed on you would be under section 271 FA. So the penalty that we are discussing now is the penalty which is under section 271 FA. Are you clear with this, students? Now this penalty, I think all of you are aware of it. 500 rupees per day. The thresholds are there. The 500 rupees per day penalty, the threshold. This is under 271 FA. There is one more penalty which is there of rupees 1000. There is also one more penalty, students, of rupees 1000. Now what is, when 500 rupees per day would be the penalty that would be charged, and when would be the 1000 rupees penalty that would be charged? These are the two things, students. Now always keep in mind, after 31st of May, the penalty of 500 rupees will begin. After 31st of May, students, the penalty of 500 rupees will begin. Is that clear to all of you? So I may say that, say for example, here one very classic example which has been ICAI has been targeting you in the MCQs. In the MCQs they have done this one. So say they have given you the notice on 15th of July, and 15th of July, because you have not filed the AIR, so they have given you the notice on 15th of July to file the AIR up till 31st of July. To file the AIR up till 31st of July. But you actually filed the AR on 15th of August. You actually filed the AR on 15th of August. So what happens? As I told you, your due date was 31st of May. So what will happen now in this case would be, from 1st of June, students, the penalty will be imposed. From 1st of June, the penalty under 271 FA would be imposed, and the penalty would be at the rate of 500 rupees. 500 rupees. So 500 rupees per day, students, would be the amount of penalty that would be levied from 1st of June. So for 1st of June till which date? Till 31st of July. Which implies that how many days then? June 30 days and July 31 days. So 61. June 30 and July 31 days, 61 days. So that is the situation that will be there. That is the situation that will be there, students. And thereafter, students, in this context, so it will be till the expiry of the time which is allowed to you in the notice. And what is the time which is allowed to you in the notice? It is till 31st of July. So June 30 days, July 31 days. So till that 61 days, 500 rupees per day. And thereafter you will add it with August. How many days, students? August is 15 days. So 15 days in August, 1000 rupees. So now in total, if you see, this is 15,000 rupees and this is 30,500. So total, if you see, 45,500 is the amount of penalty. I hope that all of you are clear with this one. These are the MCQ questions, students. You have to be very careful about these things. You cannot take this casually. Apart from that, students, one more penalty is there for the statement of financial transaction. This penalty is in respect of the inaccuracy. So if the AIR has been filed by you, but that AIR is filed inaccurately, a lot of mistakes are there in that AIR. So you are allowed to rectify those mistakes within 10 days, students. Within 10 days, you can rectify the mistake. And in the case of failure on your part, can you see this? In the case of failure on your part to rectify the mistake, students, the penalty would be 50,000. 50,000 is a flat penalty in this case. 50,000 students is a flat penalty. So just tick mark this also. 15, 16, 17. Apart from that, students, this is the transfer pricing case which we have already done it. The TP case that we have already done it in the transfer pricing part in this context. In this particular context. And that should be all. Now, for the remaining part, students, that's it. You just remember this much. That is all of it. Okay, one more point was 271 AAD. 271 AAD. This is also an important section, students. I think all of you are also aware of this one. All the falsification entries, the false entries and all, students, or the omission of entry in the books of accounts. I think all of you are aware. Students, in this context, be very careful. So if there is a falsification in the books, primarily, which is there, or there is a case wherein if there is a falsification in the book, students, in this scenario. Now, falsification of books would be like wrong entry. You are taking up the invoice without actually having any. So, on the basis of the invoice, without actually receipt of the goods or the supply of services, just on the basis of the invoice, you are recording the transaction without actually receipt of the goods and the supply of services. I think all of you are aware the GST tax credit, the GST credits and all are based on the invoices only, isn't it? Without actual receipt of the books and goods and the services. So these constitute the bogus claims. Bogus claims is the same thing. In fact, it's only based on the invoice without any actually having any other actual transaction hasn't taken place. So these are the false entry. Now because of this, probably 271 AAD would be imposed. The penalty would then be under 271 AAD, and the amount of penalty, students, the amount of penalty that will be imposed on you would be the entire amount. And what is that entire amount? I'm talking about it. The entire amount which you have considered it. The entire amount that you have considered it, students, which you all are aware. Whatever is the amount of the false entry, that would be the amount of penalty. That would be the amount of penalty. So that is the point which is there of 271 AAD. Now you have to be very careful about in 271 AAD. One very peculiar point is there, students. All of you just pay attention to this one. In 271 AAD, there is one very, very peculiar point. Do you want to know what is that peculiar point, students? That peculiar point is that, see, the assessee in whose books this crime is committed. The assessee in whose books this crime is committed, that assessee is going to go. But the perpetrator of that crime, who are the one who causes to make these false entry, and who is the one who is the cause of the false entry? Generally, in many cases, the CA instigates the assessee, gives this novel idea. So the person who is causing to make this false entry, even that person will bear the heat of 271 AAD. So the assessee who has actually done it, as well as the one who is the cause to make this false entry, who has given this novel idea, so as to, or who has facilitated this entire thing, like, don't worry, I've got networks, I've got contacts, I'll get the invoice for you. You don't worry, you just relax, I'll get the things done. So the assessee who is relaxing, in his books this false entry is recorded. For him, 271 AAD penalty will be imposed, which will be about, would be how much? Would be equal to the false entry which has been recorded, At the same time, the same amount of penalty under the same section of 271 AAD would also be imposed on the person who is the architecture of this particular false entry, and he will also face the same amount of penalty under section 271 AAD. I hope that all of you are clear with this one. This is your 271 AAD. So this is the point, students, which I have discussed, and this exactly is the game now. So students, we have dealt with this particular proposition now of the penalties. So the penalties comprehensively has been over. Do what we have discussed, and that should be all. Now for the last area, if you see, there is a prosecution. Generally, they don't ask the question on prosecution, students. Generally, students, they don't ask the question on prosecution. But still, however, students, just one particular before I go to prosecution, because see, this is a very important linking, and that is the reason why I thought, see, somehow or the other, you never know how the ICAI will strike you and strike you hard. Just only one last point which I will discuss with you before we put a final departure to this concept, and then we go to prosecution. One question I will do with you, prosecution, that's it. Entire segment is over. Just pay attention to this last concept. So just now we did 68, and we were discussing about the cash credit, and we were also discussing about the fact that, about whom? About the fact that the money was being received from whom, students? The money in this particular case was being received from all these persons, which I have just told to all of you. The shareholders. The shareholder who has subscribed to the share capital of the company. The shareholder who has subscribed for the share capital of the company. Now, I must tell to all of you, because you may not be aware of it. Generally, students, these are the shareholders. Do you know who are the shareholders? Like, I have got 20 crores of cash. I want to make it white income. What to do? I am getting a lot of tension. 20 crores of cash is there. I want to make it as white income. Do you know what I will do? I will make a company. And then I will take up the service of manpower supplier agencies. The manpower supplier agency. Now, manpower supplier agency, they have got, say, around 1,000 people who are like potato vendor, vegetable vendor, laborers. So these are the people who are in their list. So what will be done? Do you know what will be done? For each of these 1,000 people, the bank account will get opened, and each of the person will then deposit 2.5 lakhs in their bank account. Now, how the 2.5 lakhs would be deposited, you all know. From this 220 crore, I will just give it to them, every one of them 2.5 lakh rupees. So that every one of them now will deposit, that cash should be given to them, and they will deposit in their bank account. And these same people will then subscribe to the share capital of the company. So the 68 thing. So now what I will do? So here, they are the one who are subscribing to the share. Now, students, what I will be doing what I will be doing in this case, I will then, like say within a month or so, there would also be a share transfer agreement wherein because I will purchase from all 1,000 people the shares. From all the 1,000 people, I am going to take up the shares, and I will pay them 1 rupee per share. 1 rupee per share, students, I am going to pay to them. So by virtue of this, everyone, so they would have purchased it at 10 rupees at the face value, and they will sell it to me at 1 rupees after a month or so. So what happens now? So 1 rupee, that actually becomes for them like a commission, because what they have done is that they have deposited my own money in the company. They have deposited my own money in the company, and then I have given them 1 rupees check. I have given them 1 rupees check per share. So into number of shares. So in that case, students, you should be aware that what I have effectively done is that I have ensured that probably all the money, now I am a 100% shareholder of that company. And therefore, in that 100% shareholding, I am controlling 20 crores because the company has got 20 crores. And also being a 100% shareholder of the company, I am controlling that 20 crores of rupee in that particular way. So this became a huge nuisance, and all of you know what the situation was. So the government, in fact, introduced Section 68, and as per Section 68, what they did, they are now asking, what is the source of your source? Means, what is the source of your potato vendors? What is the source of your vegetable vendors? So now students, you will be under the obligation to disclose who is the source of your potato vendor, who is the source of a vegetable vendor, and that is the reason why this 68 to target this particular arrangement of massive tax evasion that was taking place by virtue of floating up private companies, and in the private companies, who are the shareholders? These are the shareholders, and from them, and one day they will exit. Ultimately, the person who remains is the one who actually has the cash income, the black money, and he converted into white. And this is the reason why they targeted through 68. Now they are asking, you tell me what is the source of these potato vendors and all. And that's where this particular question is, to target them. Now, but still, these tax evader went one step further. They came to know that now section 68 will be dangerous enough, because now they cannot trade it off. They have to suffer this, because the company will not be in a position to explain from whom the potato vendors has got this particular money, and they will fall in the trap of 68. They will all fall in the trap of 68, isn't it? So therefore they introduce another. Now what these people did was, they thought of a better idea. Now they will say that now we will not approach to potato vendors. We'll approach to a big shot, HNI, high net worth individual, who has got a net worth of say rupees, say himself he is a 500 crore net worth person. So now I will approach him and I will tell them, look, I've got a 20 crores cash. I want a check in my company. So why don't you do one thing? I will give you 20 crores 50 lakh rupees. 20 crores 50 lakhs I will give it to you. You put up 20 crores check in this company and subscribe to the shares. Subscribe to the shares. And thereafter 50 lakhs is your commission to do this service. You subscribe to the shares. Now obviously what I will do is this, that in this case, the face value of the company, the face value of the shares is 10. Obviously I don't want to make him as a majority shareholder. I want to make him as a minority shareholder, because I want to control his entire money. So do you know what I will do? I will say that, look, you will subscribe this 10 rupees shares at rupees 10,000 per share. So at premium you will subscribe it. At 10,000 per share you will do this. So therefore now he agrees, so that the number of shares that you will hold will be less. And you are bringing that money. You are bringing that money. So your black money will get converted into white. Because you are bringing that money, that black money will get converted into white. This is the modus operandi that people adopted. And now tomorrow, if the assessing officer will ask me, who is that person? I will tell that person name. If I have to disclose, means the company, who is the company will disclose the name of the shareholder. If the company also has to establish that this person, what is his source? So obviously he is a HNI of 500 crores. You cannot ask him a source whose HNI itself is 500 crores. So therefore 68 would not be applicable. 68 will not be applicable. And this person, he is having a very few number of shares, but he has brought in 20 crore rupee. He has got very few number of shares and he has brought in 20 crore rupee. So how do we handle this case? So they introduce accordingly, students, section 5627A. 5627A was being introduced as per this section of 5627A, students. I think all of you are aware of it. What they have essentially achieved through this section is that now the share premium, students, the share premium. Now share premium, students, when you have to see the share premium, you have to compare the two. The subscription amount minus the fair market value of the share, not the face value, but the fair market value of the shares. So this is when this is applicable to the private company receiving the shares from the resident shareholder. So subscription amount minus the fair market value of the shares. So these two particular things. So if the difference between this is the share premium, this share premium would be taxable as IFOs in the hands of private company. Are you also with this one, students? And did you all got this one? This is again a very notorious area, students. Be very careful about these things. Notorious areas are they. Are you clear with this one, students? Do tell me quickly. Jade. So this is the point now, students. With that, we are done with this completely. Mamta. One MCQ question, 271 AA. One MCQ question. I'll just again will tell you. This is about getting the immunity from the penalty. This is of getting the immunity from the penalty, students. So obviously the underreporting, which we all have seen. So if and the penalty under 270 is the 50% or the 200%. Now if you want to get the immunity, meaning thereby, if you want that the assessing officer should not be imposing the penalty on you, you need to satisfy the following conditions. First of all, the condition, the immunity means no penalty would be imposed on you under 270A only if the situation is covered under the underreporting at 50%. Meaning thereby, it should not be the case of a misreporting of 200%. If it is a case of a misreporting of 200%, then we are not going to give you the immunity. Then you better file an appeal. Go there and just see. Let's see. We'll meet in the court of law. And in the court of law, we'll see probably whether there is a case of, is there a case of the imposition of penalty or not. So that we will decide in the court of law. That is what it happens. So this is point number one. The second point is that therefore only 50% of the tax on the underreporting of the income, only that 50% can be waived off, not 200%. That is point number one. Second particular point, students, is about what? The second particular point, students, is about the fact that what is that? That the SSC should be paying the tax along with the interest which has been demanded in the order of assessment. The SSC should be paying, students, the tax along with the interest in the order of assessment. Did you all got this one? Tax along with interest. Now again in the MCQ, ICAI has done the cheating. Again in the MCQ, students, ICAI has done the cheating. And what is the cheating that they have done? They have said that he has paid only the tax. Interest was missed. The students don't read the question carefully. And they could not identify that the interest is missing in the question. So he said that he has paid only the tax, but interest was missing. So what is the answer, students? Whether he will have to also pay the interest along with the tax? And the answer is yes. So the SSC should be paying the tax plus interest as per the assessment order and within the time limit as per the notice of demand. He should not, obviously, students, if we are granting the immunity to you on the penalty, we are expecting that you will not file an appeal. You will not file an appeal because it would be as good as what? Students. Yes, Kirti, it is already available. I've taken the amendment lecture. One last amendment lecture I'm going to do on second. That I'll do it in YouTube also and through a special class also. In both I'm going to do. That is on the partnership assessment, but linked with the RTP question also. Because in RTP there are two good questions are there. Very good questions are there. So I'm going to link it up. So only that is left. Other amendments we have already done it. Kirti. There is an amendment series which has been there. You'll find it in Unacademy. Or else in my Telegram channel also you'll find it. There also you can find it. So students, if you all will see over here, what I was saying to you is that the fact that we are giving you the immunity under section 270A, the fact that we are giving you the immunity under section 270A, we are expecting that you are not going to file an appeal. This is just to save upon the cost of filing an appeal and fighting the appeal, that we are giving you the immunity. And that is precisely what you should always keep in mind. And the application for getting the immunity should be filed within 1 month. The MTP question of the MCQ question of the ICAI was on that interest, which I have highlighted upon. I hope that you are getting this particular point, students. So which I have highlighted upon. This is where the MCQ question was being targeted. Time limit and the order and all, you can skip this part. With that, now, so the last one is the prosecution, which has been there. The prosecution part, students, is what will be. Students, in your ICAI module, they have only covered the faceless assessment. Faceless penalty, I am not seeing it. So only faceless assessment is there. So I will also do in the next class, that is tomorrow, one faceless assessment. We'll try to finish it off. Okay, so tomorrow's session when we do of YouTube revision, in that I will just do the faceless assessment, because in the module only faceless assessment is covered, which I was looking into it. Okay, now for the prosecution part, the last section, prosecution, and then we move on. This will be the end of our session then. The prosecution, and in the prosecution, see, this is the case. Offense and prosecution. So there are various particular cases like tax evasions and all. Generally, students, just keep in mind that tax evasion is a case for the prosecution. This general point, and directly one question we will be discussing it, so that gets covered from there itself, and we are in a position to wrap it up. So students, anything like evasion of tax and all, evasion of tax, students, will that be subject to a prosecution? And the answer is yes. Okay, now there is a minimum and maximum tax evasion. How much is the tax evasion? To that extent, we will decide the quantum of your jail. Minimum 3 months or 2 years, or if the tax evasion is more than 25 lakhs, minimum 6 months and 7 years. So that is the kind of a thing. Although they haven't asked any question in this regard, but this is what it is, students. Okay, now here is about willful payment to evade, willful attempt to evade payment of tax or penalty and all. Meaning thereby, one is about evasion of, this is about, like, many students are asking, sir, what is the difference between this and this? So I'll just tell you, those who would be reading it out later on, although not that important. See, one is that I have evaded the tax itself, like in my total income and everything. My total income and everything, students, I have evaded by all whatever underreporting, undisclosed income, whatever be the means which was available to me, and unfortunately, say because of search or survey, whatever be the reason, my undisclosed income or my tax evasion got detected, and therefore, apart from the tax and penalty, I would also be subject to prosecution, which is 276C1. The second particular case of prosecution is about the payment. What is this particular part of payment? Student, it is like this, that once the notice of demand is given to you, once a notice of demand, students, has been given to you, within 30 days you need to pay. Notice of demand has been given to you. You have to pay the amount which is demanded within 30 days. Now what we have found is that you are in underground mode. So the SSC, students, has went underground, and he is now evading. Now he is changing the cities, locations and all. He is changing from one location to another location. Underground he is staying. So therefore, what is the scenario? The scenario is that he is now evading the payment of tax. So this is what it is. 276(2) is targeting the evasion of taxes. So in that case, students, the minimum jail term is 3 months, and the maximum is 2 years. So it would be like the first category of this, the first category. Which is the first category? The 3 months a year and the 2 years. The same is also would be the penalty that will be imposed. Just do these two things. If you at least want to do anything else, these two things will be sufficient in this regard. Now, students, if you can just read this particular part, read this one, friends. So 276CC of the Income Tax Act, which deals with the prosecution for failure to furnish returns of income, provide as under failure to furnish ROI within the time allowed in the notice. Prosecution will be there. So even this is an important point which should be very careful. By the way, students, we just now have done the AIR part. So supposing they have not filed the AIR within the time allowed. Just now we discussed the AIR which was there. And in my example, I have told you that on 15th of August, he has filed the AIR. On 15th of August, he has filed the AIR. So in that particular case, what is the conclusion that we have done? The conclusion, student, that we have done was that 15th of August, so therefore penalty would be charged. Whether he would be also liable for prosecution, answer is no. Because the prosecution is only for the ROI, not for the AIR. So the ROI, if I have given you the notice, under these section like 148 is the reassessment, now this 153 is out, so you don't have to worry about this. So 142, 1 or 148, in that section I have given you the notice and within the time allowed you have not filed your ROI, then in that case be ready, students, be ready for what? The prosecution proceedings to be launched on you. And secondly, even as basic as this one, failure to file the ROI within the time allowed under 139(1), this is such a basic thing. Even in that case also the prosecution can also be lodged on you if you were obligated to file the ROI under 139(1), but you have failed to file the ROI under 139(1), you will then be prosecuted. You will then be prosecuted in this regard. Now there are certain exceptions which have been given to you. So which are those exceptions on the basis of which the prosecution because of the ROI as mentioned above will not be applicable? Because of the ROI as mentioned above will not be applicable, they've given it to you. Exception is if the ROI is filed before the expiry of the relevant AY. Now this relevant AY has to be substituted with 31st of December. Has to be substituted with 31st of December of the AY. 31st December of the AY. So if you have not filed within 139(1) the ROI, but you have filed the ROI after the 139(1) due date, but before 31st of December, then no prosecution, whatever may be the amount of income tax payable. No prosecution, whatever be the amount of income tax payable. Okay. Now, if no ROI is filed, students, in this context, under 139(1), then that's a game, students. Then that's a game. Be careful. Herein, what is the situation? There are two things. Students. If the person is other than the company, if the person is the company. So, if the person is other than the company, so in this case, we will not see the tax amount straight away in the jail. Straight away the prosecution will be charged of this case. Straight away the prosecution would be charged in this case for the company. Okay. If the ROI is not filed, so we will not see what students? We will not see the amount of tax. Simply go to jail. But if, say for example, if it is other than a company, like for example individual and all, HUF partnership firm, so for them, if they haven't filed the return of income, and say for example they are 144, best judgment assessment only will be done then. And in the best judgment assessment, student, the amount that comes out is, student, the amount is which comes out in this case is what? Is say less than, is 10,000. The tax payment, the tax payable after, definitely this is after TDS and advance tax. This tax payable is after TDS and advance tax. Advance tax. It is how much? It is 10,000. Can you see this? So the tax payable is less than 10,000 rupees. If the tax payable is less than rupees 10,000, then in that particular case, what is our conclusion, students? Please tell me what is the conclusion. Then will there be any prosecution? And the answer is no. But for the company, students, if the company is the one who has not filed the return of income at all, If the company is the one, students, who has not filed the return of income at all, will they be also be subject to the same relief? And the answer is no. For them, they will have to suffer. They will have to suffer, students. The company will have to suffer. I hope that all of you are clear with this one. Okay, so this is how the things has to be looked upon. Now, herein, what has happened is that there is one case of KLM, which is a question which ICAI has asked in the examination. So the KLM was a firm who has not filed the return of income. KLM was a firm who has not filed the return of income, and that firm tax liability after in the assessment was less than rupees 10,000. The tax liability in the assessment was less than rupees 10,000. So if it is a case of tax liability of less than rupees 10,000, then what is the conclusion? Will tax liability means after the credit of the TDS, TCS and advance tax. So therefore, in that case, if it is less than rupees 10,000, then you will not be prosecuting that particular person. I hope that all of you are clear with this one. Every one of you are clear, and that exactly is the point, students. So with that, students, we are done with this particular part, and ultimately entire prosecution, then everything is over. So one class more, students, you are done with it once and for all. Only one lecture more. So our total revision, students, would be now 70 marks revision is over comprehensively. And after tomorrow's class, 70 marks is over. 70 to 75 marks, I can say that way. After tomorrow's session. And thereafter, as I told you, then we will be in our last lap of revision, which is of the balance 25 to 30 marks. 25 to 30 marks. Again, I'm repeating, students, in my description box, by today evening, you will get a very comprehensive link of all the topics along with the link of the lectures. And more importantly, students, I'm repeating this point again. If you can invest 12 hours, around 12 hours, students, if you can invest to do 12 to 15 hours maximum to do the case study lecture and the MCQ, which I've done it, of the ICAI booklet, it will be really be very, very helpful for all of you. It will be really be very, very helpful, for the reason being, from the booklet, 15 marks question will be targeted. 15 marks question will be targeted, and more importantly, you will have a final revision through a practical application, the practical mode. So that is the best beauty of it, and that exactly is the point, students. So students, this is what it is. Tomorrow also, I'll keep it at the same time, 7 o'clock. Don't worry about that. So I'll keep it at the same time. Oh no, sorry, tomorrow I have to just check, students. I'll have to check. Just a second. Allow me a... Just allow me a time. Students, tomorrow morning will not be possible. Evening only it is possible. Tomorrow. Okay, evening. Only that is possible. Evening time, students, I will keep it at, say, 7 o'clock or 7 or 8 o'clock. As per whatever you wish to have it. Which is the preferable time in the evening? I'll select that time only. Which time, students, you will prefer? Jade? Mamta? Now, students, there are some, I think, one important, these announcements are there, which you can find it over here, is that one intermediate announcement, students. Today is the 31st last day for this enhancement, but tomorrow there is an increase in the price. Can you see that? The new price and the old price system. All your intermediate students, first of all, even your intermediate friends, do, when they are taking up the subscription in this platform, do tell them to use the code CADS. CADS code for your intermediate, article, junior, family members, whosoever it may be. That whenever the referral code they have to put up, they will put up the code CADS to get the benefit of the subscription of discount. Now students, if those of your colleagues, friends, juniors, if their attempt is in November or maybe May 23, do tell them that today is the last day. From tomorrow there is a hike in price, like 3-month subscription for the intermediate is getting increased. So is also the case with 6 months, 12 months, 18 and 24 months. So you can see there is a tangible increase. So tell them to avail this offer and get the benefit of this particular the platform, which is at a very discounted rate. So this is what it is, which they just need to be very careful about it. Tell them to take this particular admission by today by using the code CADS. So this is what it is. Special class students, I have already told you today evening, if it is possible for all of you. Today evening, because today evening at 5:30, but that will be a special class. I'll be doing the non-resident taxation and transfer pricing. So NR taxation and transfer pricing is what I'm going to deal with it in the today's evening class. So if you all would be in a position to attend it, then do attend it without fail, students. Do attend the same without fail, students. That is my request. That is a case study which I'll be doing it in the evening on NR taxation, transfer pricing, TDS and TCS. Couple of them I have already done it. Remaining part I'm going to do it today. Couple of them I have already done it yesterday. Remaining things, students, I'm going to do it today. Is that clear to all of you, students? So 5:30 to 8 o'clock it would be today's time. So that is what I'm going to do it. So that is the point. Then thereafter, students, the subscription plan that is there for our CA final. So we have got the subscription plan, which is 6 months. So any of your friends have got their attempt due in November, they can take up this benefit of subscription plan, which is of 12,500 rupees. 6 months, but this is a 6 month subscription. Okay, and they get a 10% discount with the referral code CADS. So that is what it is. So November 22 students who want to cover their syllables, they can go with this. May 23 students, 12 months is there for them. May 23. Okay, even November 23 can go with the 12 months plan. And with that code, they can get 10% discount. Iconic subscription, students, this iconic feature, I think all of you are aware of it. Like here, the subscription is 12, 24 and 36. And over here, students, the entire subscription model revolves around on the fact that like there are features, host of features given. Like textbook is provided in the iconic. And apart from that, like there is a doubt solvers, dedicated doubt solvers round the clock. Then there are 3 test papers for every subject. Every subject has got 3 test papers also. So even that is one of the very important feature. And like you take up for 12 months, like many students actually have got thought that, so what about the fact that if we are taking up subscription for second group, say be it plus or be it iconic, what happens of that? Because we are having an attempt in May 23, November 23. Don't worry, any case, like even though like for example you are taking iconic, they will give you a form. In that form you have to choose, like for DT you are taking with me, so you have to choose that I'll be taking up Sir's DT and accordingly I want his textbook. So they will accordingly give my textbook to you in this process. So this is how it happens in the iconic platform. And then you have to, and the fact that you are specifying your attempt as May 23, then according that attempt book would only be provided, and then that is how the things would be considered. So this is systematically organized in this particular way so as to make it hassle free. So 12 months, 24 months and 36 months is what is the situation. Combo subscription is also there. So iconic starts with minimum 12 months. This is again for the entire group. So if you can see, 28,500 is for the entire group with the host of feature which I've told you, inclusive of the books and the other features which I've told you. And it will be like around 26,000 if you put up the code, which code? CADS. So if you're putting up the code CADS, so you get that same particular discounted particular 10% rate, which makes you a 2,800 or 2,850 discount. So roughly around, you can say between 25 to 26,000 rupees entire group 2 with all these features which I have told you just now. Combo plans, students, are also available to you, and that exactly what it is, students, in this regard. So students, this is what it is. So just spread the word of mouth about this particular feature which I've told you, and that is what it is. So if possible, students, again I'm repeating to it, today evening, students, try to attend for what? Try to attend for, students, this particular session of the case study which I'll be doing it. I will be, students, again I'm repeating, the case study and MCQ link also I'll be putting up in the description box. Don't worry, I'll be putting it in a systematic manner so that you all can link it up without any hassle. Okay, so see you then, students. And tomorrow evening, you have not told me the time. What time that you would prefer for tomorrow evening for the YouTube lecture? Morning I cannot have because at morning I have got the plus lectures, so only in the evening I can consider. Can you tell me that, students? In the evening, quickly. Between 7 and maybe I'll just, otherwise 7 o'clock is one time which we can consider, 7 to 10. I think that could be the time, or 6 p.m. is also okay. I am also fine with that. So we can wrap it up. Even that is fine with me. Fair enough. So let's do it in that particular way then, and freeze this once and for all. See you then, students, tomorrow. Have a nice day to all of you. Take care.